Interesting assets in focus as we get towards the start of the European trading day. Then this is S&P futures and Nasdaq futures flat over on the S&P, so not much guidance there at the overall sort of level from the US. Nasdaq futures down 0.2%, maybe the Nvidia effect. Certainly it was weaker, down by 6% at one point after hours, but then pulled back from those losses. Strong numbers, but didn't quite meet up with expectations. Two-year yield, a lot of focus on the German fiscal situation, but actually it's moving in very good company this morning with French markets. Brent crude up at $82 a barrel. That sort of happened in the background. A lot of focus, of course, on the geopolitics. That doesn't seem to be moving things. We're focused a lot on stockpiles out of the US. Tom.
Futures here in the UK, FTSE 100 pointing up by 0.2%. The DAX futures looking to add 25 points, and the CAC current in positive territory as well on the futures.
So futures pointing slightly higher this morning. So waiting for a little bit of positivity to come through on European equity markets at the open of trade. But as I was pointing out, the US picture is a little more lackluster, so we'll see how long that lasts. We're without a great deal of sort of macro conviction, as we were discussing with our colleague Mark Cudmore from the Markets Live blog a little earlier. So the FTSE 100 is up by 0.2%. A little bit of dollar strength creeping in after a day or so of dollar weakness. Certainly Monday very pronounced in the dollar weakness side of things. The Spanish IBEX jumping up 0.3%. So actually this session looks a little different to Asia. Asia was a little more lackluster, and so we seem to be buying stocks but selling sovereign bonds this morning. We see those yields going higher. This is the German two-year yield I mentioned earlier, but it is in good company with the French, the Spanish short end of the curves there. So it's not as if this is all about the German fiscal story driving things there. And as we were talking through with Mark, perhaps it takes a little longer for the impact of what we've seen from that German court ruling to really take effect. The UK 30-year yield, interestingly, so the action there at the long end, and pretty mixed, flat when it comes to commodities this morning. From a UK perspective, waiting then for the autumn statement. No doubt there will be some interesting news lines that could move some individual stocks. We'll look for the big overall themes there as well. Tom, what do you see in the sectors?
There isn't a lot of drama across these sectors. Just 2 out of the 12 currently in negative territory, and the moves aren't altogether pronounced across the major sectors that we look at. Autos is making up for some of the losses of yesterday. It was one of the biggest losers across your sectors. It was real estate at the top of the list, followed by autos. Autos, though, today pairing some of the losses of yesterday, adding 0.5%. The banking sector is in positive territory. Financial services adding a little over 0.2%. Energy as well gaining, as you said, Anna. Brent back above $82 a barrel. We watch that OPEC Plus meeting, expectations around what could unfold there towards the end of the week. Energy as a sector gaining 0.3%. I'll also point out that insurance is doing relatively well, adding 0.5%, as are basic resources as a sector. Now just one sector in the red, that's technology, currently flat, I should say. Health is unchanged. Technology just down a smidge on the back of potentially the linkages to Nvidia and the disappointment, again, the sky-high expectations around that company. Across your benchmark, you're seeing gains of 0.2%, Anna.
Okay, so that's the picture across stocks there. Modest gains coming through, perhaps better than modest, up 0.3%, as Tom pointed out. Let's talk to Sophia Holter-Acosta once again from the Markets Today blog and discuss some of the things that are driving markets this morning. Sophia, as I mentioned, we're waiting for the autumn statement. So from a UK perspective, this is going to be important. The Chancellor clearly wants to see more investment in the UK, and there's been a lot of talk about whether we'll see some tax changes to drive that. What is your expectation? What are you going to be watching out for?
It's all about taxes. So there's an expectation of business tax cuts, and that's really what would drive investment. But really, the headline will be anything on personal taxes. So we are expecting some cuts perhaps to the national insurance. This would affect about 28 million people, according to the Times. But really, there needs to be something eye-catching, because Jeremy Hunt faces a really big task when it comes to convincing voters that actually, as Sunak himself, the Prime Minister, promised yesterday, that this is the moment for tax cuts to revive the economy and to get not just businesses but also consumers spending again, because that is really the big concern heading into what is supposed to be a very strong season for consumers, is that people don't feel confident about the future. So would this really move the needle on the economy? There needs to be some kind of promise or at least action from Jeremy Hunt today.
And part of that lack of confidence, at least for some households, will be linked to higher mortgage rates as people look to remortgage. We've seen gilt yields, they're up 2 to 3 basis points today, so a little bit of money moving out of gilts. But in the last few weeks, gilts have been falling. How has that impacted the mortgage market in the UK? Are we seeing any adjustments lower in terms of interest rates?
We are. So since September. So the BOE has very much there is no expectation of another rate hike from the BOE, despite all the rhetoric that we've gotten out of Andrew Bailey and his team that a rate hike is still very much on the cards. So the expectation that rates have peaked at 5.2% is really filtering through to the swaps market. That's how mortgage rates are priced. And now we're seeing, according to Bloomberg Intelligence, some mortgage rates being priced below 5%. So this is a big drop, about 100 basis points for some banks since September, and really shows that it's having already an impact on the market. And this is a very kind of quirky thing of the UK mortgage market, that it's priced on expectations rather than actually the base rate of the BOE. So it's really how the BOE manages that message. And if the market is actually expecting rate cuts next year, that is good for mortgage holders.
Interesting to think about other UK news themes, and we've seen the NHS signing a contract with Palantir, but actually Palantir shares fell on this news yesterday as much as 4%, because the value of this anticipated contract was not as much as had been expected, but it's £480 million. What does it mean from the UK perspective?
So this is quite a controversial deal from the NHS, because there's concerns over how this company, this is co-founded by billionaire Peter Thiel, will manage the data. Palantir was the front runner to win this contract. It has worked with the National Health Service since the pandemic. So the software was used for the UK's vaccine rollout. But again, it was controversial on the UK side, and it was slightly disappointing on Peter Thiel's side, the company that he co-founded, because it's perhaps not as valuable a contract as expected.
Yeah, Peter Thiel is a relatively controversial figure. But Palantir, when I've spoken to them, have said, look, we don't hold this data, we don't own this data. We're providing a service that layers on top of this data. But of course, there is that controversy in terms of this contract with the NHS. Sophia Horta-Acosta, thank you very much indeed from our markets today blog. You can get more, of course, from Sophia and the rest of the team on the front page of the Bloomberg UK website, or by typing TLIV GO on the terminal.
Here's what we're watching out for then today. At 12:30 p.m. here in the UK, the Chancellor, Jeremy Hunt, will deliver his autumn statement, which will outline the government's spending priorities. As we were just discussing with Sophia, a lot of focus on whether there will be tax cuts, how that will be kept non-inflationary, if you like. And now at 1:30 p.m. UK time, we'll get preliminary readings on US durable goods orders for October. Also at 1:30, an update on US initial jobless claims, and watch out for earnings from the agricultural manufacturing business, machinery manufacturing business. Those are due out before the US market open. And interesting there's a bit of a theme. We've got durable goods and numbers from Deere. There's a focus on buying, machinery and whether businesses are confident enough to ramp up capex, or are dialing back and cautious on capex as interest rates go higher. Sometimes that's something you'd watch out for, of course. But I know the jobless claims is also going to be an important macro driver. We'll look to see if it gives us any direction.
And if you link the manufacturing part and the big name brands like Deere with what's happening in the retail space, and if that caution does come through, we've seen retailers cautioning about 2024, then maybe that builds on those downturn expectations, those recession themes that have been flagged as well. But yes, US jobless claims, in terms of just what's happening in the jobs market, it was worth noting that last month you got the highest print in about 2 years. The forecast is for jobless claims to come in at around 230,000 later today, Anna.
OK, so no doubt we'll return to those soft landing, hard landing conversations as a result of that. What clues in those jobless claims numbers? Coming up on the programme, we take a look at some of the stocks on the move this morning, including on the Stock 600, the biggest gainer, Sage Group, the software company, beating estimates, guiding positively with margins, returning cash to shareholders, and with a clear view on the autumn statement. We spoke to the CEO earlier on. This is Bloomberg.
What's the best investment advice you've ever been given by anybody?
The compound interest, the compounding of returns is an incredible miracle of business, finance, and human existence. Everything you learn is additive every day, and if you keep at it and don't quit, it's an incredible miracle. And it's not just interest. It was always said about compound interest returns, compound business returns, compound human returns. They're all very additive because you learn every day. And if you keep at it, it's very, very helpful.
In your observation of investors, what do you think is the biggest mistake that average investors make?
Selling at the wrong time.
And they sell when the prices go down?
Yes.
Or
yes. Not keeping. Look, people have conviction, or they invest for if they invest for the right reasons, just keep at it.
Of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg. Context changes everything. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
This is Markets Today. We are 11 minutes into the European trading day. You're seeing gains across the European stocks benchmark, I should say, of 0.2%. Let's get a check on some of the individual stocks on the move then with Joe Easton. Joe, what are you looking at?
So we've got Adevinta rising over in Oslo at the moment, up around 6%. It's actually trading just below the offer price. The offer price was around 115 Norwegian kroner a share. It's at 112 now. Perhaps some investors thinking that deal not necessarily going through. We're also seeing Schibsted gaining. This is the big shareholder, does seem to be giving their backing to that deal. This is the classified company with brands like Gumtree in its portfolio. Now, Kingfisher, DIY, something I don't really want to think about with all the DIY I've got to do in my new flat, but that one is dropping 7%. They miss on sales. UK B&Q doesn't look too bad, but France is very weak. Retail sales weak. Warm weather putting people off from buying new radiators, that kind of thing, according to the company. Now, Johnson Matthey, this is chemicals here in London as well. They supply into the auto sector, cars, that kind of thing, and they are reporting some strong numbers out today, and that one gaining a bit of positivity for the chemical space, up around 3% now, so looking pretty good at the moment. Then we're going to go and look at ThyssenKrupp. Now, this one had a shock impairment. They announced at the close of trading yesterday around 2 billion euros, but their sales continue to look pretty strong. Construction holding up all right for some of their steel markets. That one gaining around 4% in Germany. Also in Germany, we've got Fresenius Medical settled a US lawsuit yesterday and raised their sales guidance. This was related to a lawsuit around a war veteran project that they did with the US. They were sued over that. They've settled it now. That one's stock is going higher today. Sage Group you had on the show earlier, that one now at a record high for that stock. The stock jumping 6%. That was the best performer on the stock 600 a moment ago. Enterprise software, payroll software, that kind of thing, doing pretty well. Sales gaining for Sage Group. Now, Casino, once again, weak sales for them. Another profit warning for the French grocery firm. We've had a number of those. Online sales continue to take away their market for them. It's mainly cheaper supermarkets over in France, and that one declining once again today. Now, there's some pretty big broker moves out this morning as well. We've got Hugo Boss raised to buy at Deutsche Bank. They only cut that stock to hold a few months ago, but they reckon that the share price decline since then of around 10% means it's time to start buying Hugo Boss ahead of the Christmas period as people go shopping for clothes and Christmas presents. Now we've got HSBC, a rare downgrade. They're cut to sector perform at RBC, who say you should be taking profits on that stock. The boost to capital returns is already priced in, according to them, so they downgrade that one. Morgan Stanley, meanwhile, goes underweight on Gewalden. Now, that one dropped around 3% at the open of trading, but it's coming back up a bit. They supply into the retail consumer cosmetic space. We had a warning from L'Oreal recently. It's one of their suppliers, so that one getting some negativity at MS. And finally, also in the perfume space, into perfumes out of France, missed on estimates, but gaining potentially priced in on that one.
Okay, Joe, thanks very much. Joe Easton from our equities team with an update on some of those stocks on the move. Let's talk about global equities and do so with Fabiana Fideli, who joins us now from Cape Town, in fact, Chief Investment Officer for Equities and Multi-Asset at M&G Investments. Fabiana, very nice to have you with us. Can I ask you about your big picture view on stocks, I suppose? We've rallied quite a lot in November on global stocks as a result of, well, in part, the weakness of the inflation prints coming out of the US and perhaps other geographies as well. How much more have we got to run on that global stocks theme?
Good morning, Anna. Look, we see this as the unraveling of that negative sentiment on duration that had so much impact also on the long end of the yield curve. There wasn't really any major positive macro news that was really helping the rally. So we would see this as something that is temporary, and eventually markets will go back to trading on macro fundamentals.
Fabiana, there was a note out from SocGen earlier in the week saying that we are in buy the dip territory when it comes to the S&P. If we get any sharp downturns, you want to be buying the dip. Would you agree with that view?
Look, it depends on where you're buying. We are being very selective. We actually said in the past that we continue to be invested in equities. We like many areas. There are some particular sectors and some particular stocks that have been kind of thrown out in terms of baby with the bathwater, and think about utilities, think about real estate. So we do see opportunities, but not everywhere. You need to be selective.
Need to be selective. And what about the tech sector? Do you select the tech sector, Fabiana, or are you selective within it?
Yes, Anna, we spoke about it many times in the past. You know, we still like innovation. We like AI, but there are companies out there that have cash flows that can invest in their next generation of technology innovation, and other companies that unfortunately don't have the means. They have to go to markets, they have to go to credit, and the cost of funding is just too high. So also there's some great opportunities, but beware of the strength of the balance sheet.
Okay, keeping an eye on that balance sheet then. Look, you and the team, Fabiana, you built a position in the summer in terms of the long end of the curve around the US, UK and Germany. Do you start to fade that position?
Look, we still believe that position has legs. What we have done, actually, we have gone also a bit lower on the yield curve. We've also bought into 5 years after they had that difficult time toward the end of October. So we have diversified. We're still there. We still believe there is some room to go in terms of yields coming down. And actually what we believe is the risk-reward of fixed income versus equities right now, particularly on sovereigns and at the long end of the curve, looks fairly favorable, given that you also get that insurance should macro actually worsen.
When we talk tech, you talked about the strength of balance sheets, Fabiana, and I think you have a similar sort of screening around the strength of balance sheets when it comes to infrastructure stocks. You think you like some areas of the infrastructure space. Talk us through where you see balance sheet strength that's attractive.
Yes, Anna. So we actually spoke about that when we came on the program in Asia last October. Many utilities and real estate companies had been caught in this bond proxy negative sentiment, but some of them have fixed rate debt. They have very long end maturities. They actually have strong cash flows and dividends. It's a bit of a company by company exercise here. So it's not necessarily bundling all in terms of subsectors, but there are a number of them. And you actually see that investors are starting to put fresh money into this trade.
Fabio, you're joining us today from South Africa. Where does South Africa fit into your otherwise relatively constructive view on EM, given the challenges of that economy, given the historic high unemployment rates, and given now the energy and energy infrastructure challenges of South Africa? How are you thinking about that jurisdiction within your EM space?
Tom, as you know, we like EM bonds because of the real yield that they bring, and South Africa is one of those countries where you have a yield of above 11% and in nominal terms and inflation that is around 5%, give or take. So it is a great space at the moment for investors. On the equity side, there are concerns on the macro backdrop. As you say, infrastructure has been underinvested for so many years, and you've had the increasing issues with the load shedding, which are improving, but not yet to the point that helps corporates. So very high quality corporates, they're dealing with a lot of domestic issues. We are invested, but we prefer exposure not to the macro domestic backdrop.
Okay, Fabiana Fedeli, Chief Investment Officer for Equities and Multi-Assets at M&G Investments, joining us from Cape Town. Thank you. Coming up, Sam Altman is set to make a stunning return to OpenAI. We get the latest on that story. That is next. This is Bloomberg.
CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
Today's CFO has to be much, much more than a bookkeeper.
One of the most important things is looking around the corner.
We have to let go of the traditional legacy department store.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
You also have to be credible business leaders in order to really impact the business and steer the direction.
We are like biologists. We need to deeply understand the financial DNA of a company.
People just come with a playbook and say, okay, we're going to roll that. Don't do that. Think longer term.
It's an amazing time to be in this role. It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the chief future officers of some of the world's most influential companies. A new episode every month, only on Bloomberg.
City.
In London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai. Good morning, everyone.
Have a great evening. Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside?
This is Markets Today, 23 minutes into our European trading day, and we see European equity markets making gains this morning, up by 0.3% on the Stoxx 600 as all of the major markets in Europe move higher. Let's talk about some of the tech excitement that has been dominating business news flow over recent days. OpenAI says it's reached an agreement in principle for Sam Altman to return as the CEO. The move marks a stunning U-turn from the company after it shocked investors by firing the co-founder Altman just at the end of last week. Satya Nadella, the CEO of OpenAI's biggest investor, Microsoft, welcomed the news, saying, "We are encouraged by the changes to the OpenAI board. We believe this is a first essential step on a path to more stable, well-informed and effective governance." Well, we're joined now by Bloomberg Equities reporter Subrat Patnaik, who can take us through some of the stories here. And let's start with OpenAI then, because there's lots of tech themes this morning. But on OpenAI, we sort of go back to where we started, but with a much revamped board. So things have changed a great deal. What stands out to you in the new setup?
The new setup is the best scenario that Microsoft could have hoped for. It's like one of the biggest investments for the company, and investors were quite worried about where this is going. Keeping the talent intact, that is the entire team, and also the investment into OpenAI. So this seems to be the best case scenario after what happened last Friday.
Okay, the best case scenario for Microsoft, and we'll see how everything shakes out. But yes, he's back at OpenAI. And OpenAI could not do the work they do without NVIDIA chips. And we had the earnings story from NVIDIA coming through towards the end of the day yesterday. What were the kind of key takeaways for you from that story?
It was another blowout quarter, but as we were tracking the shares climbing up the entire month, 20% before the results, we were always wondering, is great good enough? Mm-hmm. And clearly, investors just want so much more from the company. And revenues came in higher than expected, forecast was strong, but shares are still down 1% today.
Yeah, high expectation, victims of high expectation. And in terms of expectation, the CEO pushing back on the idea that they are at a peak for data centers. It seems that even when you deliver something so strong, investors, they're always looking for the cracks, I suppose, aren't they?
Yeah, and I've spoken to long-term investors who think the market is huge and data centers is just the beginning, and the monopoly that it already has in the space will really help it go a long way.
So, Brad, are they doing enough for NVIDIA to address the concerns about the access to the Chinese market? They come out with new products to kind of address that they think they can get in without the licensing hurdles. What did you make of the China component for NVIDIA?
So it's interesting. They did mention that China is going to be a negative impact in the fourth quarter, but analysts on the whole think the demand everywhere else is so high, it's going to offset. And by the time it really starts to make a difference, they'll have their new chips out next year. So it should be fine.
Should be fine on China. So, Brad, thank you very much indeed on the latest when it comes to OpenAI, the implications, of course, for Microsoft and those NVIDIA earnings. Bloomberg Equities reporter Subrat Patnaik, thank you. Coming up, Binance pleads guilty to criminal charges, agreeing to pay a $4.3 billion fine. US authorities say the crypto exchange funneled money to Hamas and other militant groups. We get the details on that story next. Checking in on your European equities right now. The gains are 0.3%. Media at the top of the list, adding 0.6% at the bottom. Retail, just two sectors in the red at this point as you eke out gains of 0.3% across the European benchmark. US futures flat. This is Bloomberg.
from a mining company, which frankly is dirty, it's big, now you want to reposition the company into green energy powerhouse. Are you a walking contradiction, or what did you learn along the way?
Well, in the early days, it was considered completely impossible for anyone. Doesn't matter if you're a huge company, like back then it was Anglo-American tried to break into the iron ore industry, and they spectacularly failed, even though that back then they were the largest mining company in the world. Now, for an upstart, a tiny little company with next to no cash at bank, no ground, no anything, for them to announce that they were going to break into the iron ore industry, the global seaborne iron industry, probably the most protected, viciously protected resources industry in the world, and then take them on head on, it was just considered impossible. It was just like a fairy tale. However, we stuck to the plan. We always tested each other by making sure that we were starting where we wanted to finish, which is as a major iron ore producer. And then we took all the steps back. We calculated what the steps would be, even though some of them seemed impossible. Now we have a strategy, and we've got to go flesh that strategy out and pursue it with single-minded focus.
Good morning. This is Bloomberg Surveillance on TV.
We're thrilled to introduce Neuralink's Prime
morning,
Study,
everyone, and welcome
the
to the
first
Pulse.
clinical trial of a groundbreaking experimental device that could help transform the lives of people with Neuralink's. Imagine the joy of connecting with your loved ones,
Let's just be
browsing the
honest.
web,
We've had sort of
or
a
even
shift
playing
in,
games
are we in
using
some sort of
only your
stagflation
thoughts.
fears moment? People were talking about
This
that
is
all
made
day
possible
yesterday.
by placing a small, cosmetically invisible link in the part of your brain that plans movement. The
This is
device is
Markets Today.
designed
We're 30
to
minutes
interpret
into
your neural
European
activity,
trading day here
so
on
you
your
can
top
operate a
stories.
computer
Altman
or a
back
smartphone
in. He's set to
by
return as
simply
OpenAI's
thinking about
CEO with an overhaul
No
of the
wires
board
or
also
physical
underway.
movement
Meanwhile, AI stocks slip as Nvidia's
By
results
participating in the
receive a
Prime
tepid
study,
response.
you'd be
Israel
helping
and
to
Hamas back a
redefine the
deal that will
boundaries
free
of human
dozens of
capability.
hostages from Gaza in return for a
If
4-day
you've been
pause
living
in
with
fighting
quadriplegia
and the
from a
release of some
spinal cord injury
Palestinian
or with
prisoners.
ALS,
Plus, sweeping
you
settlement
may
for
qualify
Binance
for
and
the
its
Prime
CEO
study.
plead guilty to anti-money
We'd
laundering
love to
and
share
US
more with
sanctions
you and get
violations
you on
in one
board.
of the largest
This
corporate
may
agreements
qualify for
in
the
US
Prime study.
history. So, Tom, some really
We'd
fascinating
love to
news
share
flow,
more with
massive
you.
fines over at
You may
Binance, the
qualify.
business continues. There's the geopolitical developments to factor in. Not necessarily all of that having a big macro impact, although the tech theme's certainly to the fore, but we do see modest gains for European stocks.
Yeah, we're seeing gains now. They've been grinding out higher, up 0.3% across the European benchmark. We did have the Federal Reserve minutes that came out for the previous month, of course, and the take
We'd
from the
love to share more
Economist
with you
team
and get you on
over in the
board.
US and Bloomberg
Visit
is
our
that they
website.
were relatively dovish in terms of those minutes. We look ahead for a clearer read on the jobs market out of the US later with those jobless claims, and the expectation is those could pick up by about 230,000. We watch for that data later today. Here in the UK, the FTSE 100 back below 7,500, only by a tiny thread, back on that level now, hovering around 7,500, adding 0.2%. Whether or not the Chancellor's autumn statement is really going to be impactful for these markets is very much up for debate. Bloomberg's been reporting there will be some tax cuts that come through. The DAX is currently adding 46 points, up 0.3%, just around that 16,000 level for the German benchmark. Let's flip the screen and have a look at how the sectors are shaping up. Anna talked about the technology story, the links to NVIDIA, and in fact, some of those semiconductor makers in Europe are feeling, or at least moving a little lower, it seems, on the back of that news. But one sector so far out of these main 12 that we look at in the red, and that's health, just down 0.1%. Every other sector posting gains so far in the session, 0.6% coming through for the consumer sector. Food and beverage up 0.6. That was the best performer across your sectors yesterday. Insurance also adding around 0.6. And in terms of what's happening in the world of finance, because Sage came through, it was the last time I checked, the top performing stock across the European markets so far in the session on the back of strong earnings and a buyback in terms of the stock there, Sage gaining. Financial services up 0.5%. There's the banking sector also up 0.3%. And autos making up for some of the losses yesterday. It was one of the biggest losers across your sectors yesterday. Autos as a sector now adding 0.7%. Across the benchmark. We're up now at 457, up 0.4 of 8%, Anna.
Okay, let's say, yes, you're absolutely right. There has been a big move in the Sage Group share price. It is still the top performer on the stock 600. Let's have a quick look at some of those movers. So Sage Group up by 8.2%, the company beating estimates, returning money to shareholders, talking positively about margin developments from here. We had a really interesting conversation with the CEO about all things AI, the autumn statement, lots to talk about them with Sage Group today. Kingfisher, the retail-focused business, they dropped. A weakness in France hitting the outlook, but also interesting to note what they're saying about their most recent trading. Like-for-like sales in the last 3 weeks are down by 3.4% year-on-year, which sort of speaks to the very up-to-the-minute issues that a business like that is having. And then we're focused on ThyssenKrupp as well. ThyssenKrupp trading weaker, down by trading more positively, up by 7.2%. The industrial conglomerate, free cash flow turning positive. The company eyeing improved performance in what it calls a challenging environment. It's writing down the steel unit as the energy crisis weighs, is the headline, Tom.
Okay, let's get to what's happening in the crypto space then, with a focus, of course, on Binance and this extraordinary penalty that the company has paid. Binance and its CEO, Changpeng Zhao, have pleaded guilty to money laundering and US sanctions violations. A sweeping settlement with US authorities allows the crypto exchange to continue operating. Let's get the context, the details now, and bring in Bloomberg's Ana Herrera, who covers all things crypto for us and has been following the twists and turns of this story. Ana, your take on this settlement?
Yeah, I mean, obviously, it's quite big for a crypto firm, but I think what is most striking is what happens next, right? Like, we have someone coming in, taking on the biggest crypto job there is, which is a really hard one. They're taking on the biggest platform by far by volumes, but they've been losing market share. So can he stem that? And especially, this is Richard Teng, the new CEO, and especially, can he make sure that people don't start taking their money out, and then we end up in an FTX-like scenario where there's a bank run?
Yes, I mean, he was talking quite positively about the business that exists and what they can still do. But as we've seen revealed by the recent news flow, some of the checks and balances that you'd expect any business dealing with customer funds to implement, they just haven't been there. And so this raises real questions, I suppose, about regulation around this business. And that has wider implications for the crypto market.
Yes, for sure. And as you said, he's been saying that, but, these firms generally aren't audited, many of them. So, while they put out proof of reserves, which essentially say what they have in theory in their wallets, it's not the same as an actual audit. So until we start seeing those things, which they might start having to do now that they're being monitored so closely by the DOJ, we won't really know. But in general, it might bring a breath of fresh air to crypto, in the sense we will get more, regulation and more like standards. But it remains to be seen.
Is there any linkage? Can we tie any of this to what's happening in terms of the ETF space? There's been some developments there that were seen as positive, with some of these big institutional money managers coming in and listing their own ETFs and getting the sign-off as well from the SEC for that. Is there a link between the two? How are we thinking about these two different factors?
I guess, we might start asking ourselves, is crypto going to start getting more boring, and we'll start having the bigger firms come in, the sort of ex-regulators running the firms? And if that is the case, does it become an asset which isn't that interesting anymore, or does it really become like the digital gold that people, care and want?
Yeah, what does the regulatory impulse do to
boring could be good, I guess, given everything that's
There are
unfolded.
adverts from crypto firms around London I've seen that talk about how, it's important to follow the rules, which is not necessarily the mantra that I suppose these crypto firms are founded on.
No, they were founded by libertarians who think there should be no rules. So it's very much a big departure, right, from the origins.
Yeah, no rules, no central banks. Well, the rules do catch up with you in the end, it seems. Ana Herrera, thank you very much indeed, of course, from our Bloomberg team covering all things crypto, with analysis on Binance and that $4.3 billion fine that they have agreed to pay. A redhead that crossed the terminal just in the last few minutes, bringing us back to the real estate crisis in China, and a positive development, it seems, at least if you have exposure to that sector. China putting Country Garden on this draft list of builders to support. Country Garden, one of the biggest developers, deeply in distress. It missed dollar bond payments earlier in this year. It's in a restructuring mode, and it is now on this list of 50 developers that we reported on earlier this week that has been drawn up, this whitelist, so-called whitelist, by Chinese authorities to receive beneficial financing conditions. So it seems like this is another measure, and it also seems that some of these distressed developers and some of the biggest ones will be on this list and will be getting access to some of that support. How consequential that will be remains to be determined, but significant nonetheless that Country Garden, Anna, is on that list.
Yeah, let's get to some of our top stories then this morning. Top stories on the Bloomberg terminal. Morgan Stanley co-president Andy Saperstein has been diagnosed with cancer. The 56-year-old says he plans to keep working as he begins treatment. Saperstein was one of 3 candidates in the running to take over from the outgoing Morgan Stanley CEO James Gorman. The job ultimately, though, went to Ted Pick last month. Citigroup is said to be in discussions to start a new direct lending strategy by early January. It's the bank's latest push for a foothold in the booming $1.6 trillion private credit market. A source says that the initiative could include teaming up with one or more outside partners to provide capital for loans which Citigroup would originate.
Ken Griffin is in talks to buy a minority stake in the American football team, the Miami Dolphins, and the F1 Miami Grand Prix. The Citadel chief executive joins a growing number of finance titans that count themselves as National Football League team owners. Coming up, very different topic, Israel and Hamas back a deal that will free dozens of hostages from Gaza in return for a 4-day pause in fighting and the release of some Palestinian prisoners. We get the details. That is next. This is Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Slice through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal.
Now, more to the point.
What is the lesson or the observation?
Today, Chancellor of the Exchequer Jeremy Hunt delivers the UK's autumn statement. Will he deliver tax cuts? What is his plan to grow the economy? Can he set up the Conservative Party for a win next election? Live from the Houses of Parliament, Bloomberg Television brings you up-to-the-minute news and analysis. Special coverage begins today with Hunt's remarks starting at 12:30 p.m. London time. Bloomberg. Context changes everything.
Welcome back. This is Markets Today. Equity markets making modest gains this morning, up by 0.3%. We have some data coming out of the US. A little bit cloudy on the macro direction, though, according to the Markets Live team this morning. Plenty of corporate news to talk about. Also plenty of geopolitics. Now, the US President Joe Biden has welcomed an Israeli deal with Hamas that will free about 50 hostages held in Gaza. The agreement, which was mediated by Qatar, includes a 4-day pause in fighting and the release of some Palestinian prisoners. For more on this story, let's bring in Bloomberg's Henry Mayer, who joins us from Dubai. Henry, give us some details here of what we've learned about this hostage release deal.
Yes, so what's going to happen is 50 women and children will be released over a 4-day period. This is when the hostilities will stop completely. There will be no armed actions by the Israeli forces or by Hamas over this 4-day period. And in return, 150 Palestinian prisoners, that's women and boys or men aged under the age of 19, will be released. And in terms of the military situation on the ground, so in addition to stopping military activity, the drone surveillance missions by Israel will also stop completely in the southern part of the Gaza Strip and in the north for 6 hours a day.
Henry, what does it mean for the conflict longer term in Gaza? Are we getting closer to the point where this chapter, this brutal chapter, comes to an end?
Well, the Israeli Prime Minister Benjamin Netanyahu was quite adamant last night that this does not mean that the war will end. However, one part of the agreement could extend the pause in fighting beyond the 4 days if Hamas continues to release more hostages. 10 hostages would mean 1 extra day in the ceasefire or the truce. So, potentially what you could see is, the longer this goes on, the longer the fighting is paused, the more pressure I think that is going to put on Israel to end the war. So it's going to be very interesting to see, what happens in the days ahead. But I think we're sort of entering different territory now.
Henry, thanks very much. Bloomberg's Henry Mayer with an important update on the latest developments between Israel and Hamas. Coming up on the programme, we'll pivot back to the UK macro themes. We'll look ahead to the UK Chancellor Jeremy Hunt's autumn statements. That'll be announced just around lunchtime today. We'll be live in Westminster next with a briefing. This is Bloomberg.
And says, I want to be Ari Emanuel when I grow up. What should somebody do to get into the talent agency business or the business you're in?
Well, it's hopefully what I've taught my kids. You got to be intellectually curious. You got to be, you got to show up. And you know this like I know this. I got on a lot of planes. You just, even though that voice in your head is saying, oh God, I'm so tired, I don't want to do this. You got to show up. You got to be charmingly relentless. You have to build emotional endurance because there's no straight line to success. It's kind of all over the place, and you have to just be able to work through those things. And then I think one of the things that I do every week is I try to create serendipity.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
We have a very detailed development process. So we have what we call technically mulotype, prototype, before we end up with the production of the final product. So it's very much detailed. It takes several quarters, and we test the car in different conditions. But it's very, very interesting.
What are you most excited about? Is it the sound?
The driving emotion. Okay, the driving emotion, the performance, and also the design. They go all together. It's like three wheels, these three wheels, falling and moving at the right speed, all together. And then these three is all encompassed by the sustainability.
Okay, Ferrari CEO Benedetto Vigna speaking to Bloomberg's Francine Lacqua. You can see the full interview on Leaders with Lacqua Goes Green, airing at 9:30 p.m. New York time. That is tonight in the US, 6:30 p.m. London time on Thursday. Let's switch focus to the UK now, where the Chancellor, Jeremy Hunt, is planning a package of measures aimed at boosting business investment by £20 billion a year in today's autumn statement. On what to expect and the details, the preview, let's bring in Bloomberg UK correspondent Lizzie Burden. Lizzie, what is at stake for the government at this point? How pivotal is this moment for the Chancellor and the PM?
Well, Tom, if Jeremy Hunt's emergency intervention this time last year was all about the markets, undoing the damage of Liz Truss and Kwasi Kwarteng's mini-budget, this time the autumn statement is all about the politics. We've got an election on the horizon. Labour's got a 20-point poll lead, but he's going to have to squeeze a lot of political juice out of what our economists say is a wafer-thin margin. They reckon he's got £11 billion of headroom. JP Morgan is a bit more optimistic. They reckon he's got £26 billion. And the reason for that disparity is that while higher inflation has boosted tax revenues, higher interest rates mean it's more expensive to pay off the debt. Wherever the headroom lands on that spectrum, Jeremy Hunt is going to be really aware of the inflationary impact of any giveaways that he announces, especially because we had Bank of England officials yesterday in Parliament warning about the risk of inflation. Now, what we are expecting is a package of measures focused on growth, but also a retail offer, tax cuts, including for individuals, because the post-war this is the highest tax burden in the post-war period, and this is one of the last chances for Jeremy Hunt to change the narrative before that election. But there is a glimmer of hope, Tom. We had a poll this morning from Stonehaven, published by Bloomberg, showing that Sunak only needs to claw back 6 points in terms of votes from voters who would have otherwise stayed home or otherwise chosen a minor political party if he wants to deny the Labour Party a majority. So let's see how much of a statement Hunt wants to make today.
Yeah, so that perhaps may be seen as a glimmer of hope for those in the Conservative Party as they put forward this statement today. What specific measures then are we looking out for? We spoke to the Sage Group CEO earlier on, Lizzie. He wants some of the tax treatment for software expenditure improved. Not sure we're going to see that, but what are we expecting?
Everyone wants something, don't they, Anna? In terms of the offer for constituents that Conservative MPs want to take back to the doorstep, we're expecting national insurance, a cut to that. We were previously hearing about speculation of an inheritance tax cut, but the optics would be tremendously difficult in a cost of living crisis, especially when we're also expecting the Chancellor to announce a clamp down on welfare. That's to try and encourage people back to work because of this rise in economic inactivity since the pandemic. In terms of what they're going to give out to business, what business really wants is to make this full expensing on investment in machinery permanent. That was set to expire in 2026, but of course investment's a long-term decision, and Britain so desperately needs this investment, given that the Bank of England reckons that the UK economy is going to flirt with recession for the whole of next year. So let's see whether the Chancellor announces that and what other announcements he makes to rival the US Inflation Reduction Act, what he can dangle for businesses.
OK, Bloomberg's UK correspondent Lizzie Burden, thank you, with a preview, of course, of the autumn statement. Don't miss our interview as well with Darren Jones, the Shadow Chief Secretary to the Treasury. That's going to be just after 9 a.m. London time, live from Westminster. And we're going to have special coverage of the UK autumn statement later today from 12:15 p.m. London time with Chancellor of the Exchequer, Jeremy Hunt, due to speak at 12:30.
So that's the UK story. Let's turn to Dutch politics. Dutch voters go to the polls today following the collapse of the government led by the long-standing Dutch Prime Minister Mark Rutte. For more, let's bring in Bloomberg's Amsterdam reporter, Sarah Jacobs, for the briefing. Sarah, good morning to you from London. So who are the main contenders and what are the pre-election polls saying?
Good morning. Yes, the Dutch parliament has 150 seats, and according to various polls, the largest party is expected to secure, or is projected to secure, only 28 seats. So at this point, a coalition looks almost certain. The main contenders in the election are Dilan Yeşilgöz-Zegerius. She succeeded Mark Rutte as the leader of the centre-right VVD party. If she wins, she will be the first female prime minister of the Netherlands, and also the first to come to a country as a refugee. Then there's Frans Timmermans, the former EU climate chief. He returned to domestic politics in August to lead the combination of the Green Left and the Labour parties. And then there's the newly launched New Social Contract Party led by popular lawmaker Peter Omtzigt. According to latest polls, though, Geert Wilders' far-right party, that's the PVV, has jumped to the top, and after months of not being in the top three. So if that is the case tonight, if he holds that position tonight, the focus will really be on whether Wilders can convince the other key parties to form a coalition, as some of them have, ruled out working with a far-right lawmaker. Yesterday's polls also projected that...
Sarah,
yeah.
What are some of the factors then behind that pickup in the polls for that far-right party in the Netherlands? And what are some of the key issues that are being fought over in this election?
I think migration basically has been has taken center stage in this election. A lot of the parties, the PVV, the VVD and the NSC have been campaigning on this topic quite a bit. Then, of course, the rising cost of living and the severe housing shortage in the country have been key.
Thank you very much. Thanks, Sarah. Thanks for joining us. Bloomberg's Amsterdam reporter Sarah Jacobs with the latest on what we're expecting from the Dutch election. There's plenty of politics to talk about this morning, Tom, isn't there? There's the Dutch election, there's the autumn statement here in the UK, there's the geopolitics developing in the Middle East, of course, and not necessarily a lot of that sticking to markets, although European markets look pretty positive today. All sectors now in positive territory, actually, for European stocks. Real estate, the best performing sector, so perhaps we're back to that theme of whether we're done with interest rate hikes. Perhaps that's another day to the fore. But all sectors in positive territory. We continue to focus on technology. Nasdaq futures are weaker on that front, down 0.2%.
Yeah, look, we've been flagging our conversation with the CEO of Sage Group here in the UK, but that is the top gainer across your European stock space right now, adding, look at that, 10.4%, so at a record high for that company. Bottom of the list is Kingfisher, so concerns there, as Joe Easton was outlining for us, around some of the home building business there, down currently close to 6%. US futures are currently flat. We're looking for that data in terms of the jobs market, with the US jobless claims expected to come in about 230,000. Maybe the FOMC minutes are telling us what we already knew, but as you say, the mood still is around pricing those cuts, expectations for 2024.
Yeah, and you're right, it asks a lot of questions, the FOMC minutes, because the Fed put a lot of focus at the end of last month on just how tight financial conditions have become. We've seen in November those conditions have reversed a little, and they're not as tight as they were. So what would that lead the Federal Reserve to conclude now if they were doing the same kind of FOMC meeting? But that's a question for another day. For the moment, then, the macro things perhaps pushed to one side a little, dealing with a lot of corporate earnings and some of this geopolitical news flow. So a lot to hand over to the next hour of programming. That is it for Markets Today. You can get insight from us and the Markets Today team if you go to the Bloomberg UK website, click through to the Markets Today blog from there. There will, of course, be tracking everything that's talked about over in Westminster. There's the Houses of Parliament. You'll be hearing from Jeremy Hunt, the Chancellor, later with his autumn statement. The Pulse is up next. This is Bloomberg.
the younger generations are more, of course, pay more attention to sustainability, and so they are looking at brands that are greener. But you have to make sure you're authentic because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why part of the big transformation of our R&I, where there's this €1 billion we spend every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg. Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter, and here's what's coming up on today's program. Dramatic reversal. Sam Altman will return as OpenAI's chief executive officer, along with a board overhaul. Meanwhile, NVIDIA's results receive a cool response, sending the shares lower. Israel and Hamas agree on a plan to free dozens of hostages from Gaza in return for a 4-day pause in fighting and the release of some Palestinian prisoners. Plus, boosting business, the UK Chancellor Jeremy Hunt is set to announce permanent tax relief on investment spending in his autumn statement. We're live at Westminster. Now, let's take a look at the European market map now. The focus is firmly on a lot of the stocks relating to AI. Stocks are a little bit mixed, I guess. A lot of the dollar is gaining before some of the U.S. economic data. There's a lot that traders will want to weigh in for. Now, actually, in the last couple of minutes, we're seeing a bit of a reversal. Some of these stocks were mixed, and now they're slightly edging higher. Now, data on U.S. jobless claims, durable and capital goods orders, also consumer sentiment later today may provide clues on the direction of monetary policy after minutes from the Fed's rate meeting revealed that officials remain in a cautious mode. We're also getting the ECB warning on the weak economy, and that's heightening stability risks from some of the hikes. Does that mean that they're done hiking? Does it mean that they're just looking at some protection in certain sectors that could be vulnerable? Certainly, that's the latest from the EU Financial Stability Report, and we'll get you more on that when we get it. Now, OpenAI says it's reached an agreement in principle for Sam Altman to return as chief executive. The move marks a stunning U-turn from the company after it shocked investors by firing the co-founder Altman just last Friday. Now, let's get more with Matt Bloxham from Bloomberg Intelligence. Matt, I have to say, everything is my head is spinning. I mean, this is probably one of the most extraordinary stories that we've seen for a while in the tech space. So what do these changes in terms of governments mean for OpenAI and the model going forward?
Yeah, I think we're still waiting to hear the answers to those questions. I think, this is only really a first step. So the old board's out. There's a completely new board. Sam Altman's back as CEO, but won't be a board member, at least for now. I think a lot of the press outlets are suggesting that this 3-person board will basically now look to vet candidates to expand it maybe up to 9. So there's a question mark there about whether Microsoft will get a board seat, which obviously they've been lacking before. So I think that there's big governance changes in in play. I think, obviously, historically, the governance has really protected the kind of AI safety and security aspects of being a responsible developer of this technology. I think there are some safeguards there to protect that going forward, but maybe there'll be a more integrated balance between the commercial interests and the kind of more societal interests they have at heart.
So, Matt, I guess the question is, are there going to be warring factions inside? So is it going to need and take some time for things to stabilize? And how significant is this move from Microsoft and its AI strategy?
Yeah, I mean, I think the composition of the board and what's gone on in the last few days suggests that actually the kind of direction of travel is now much more aligned. I think this is a board that's supportive of Sam Altman. Microsoft's clearly supportive of him too. So I think there's kind of less concern there. I think for Microsoft, this is a good outcome. I mean, I think they've positioned themselves incredibly well and done a great job of being very pragmatic about what's going on. So I think they've got a huge investment in this business, and it's kind of integral to all of their AI products they're rolling out. So I think the fact that they've got Sam Altman back in place is clearly a very strong relationship between Microsoft and Sam Altman. If they get a board seat as well, then I think they'll have kind of really locked down their control and influence over this important company.
Interesting. Matt, thank you so much for all of your insight. Matt has stopped sleeping basically over the last 5 days because he's been reporting on the story so closely. Matt Bloxham from Bloomberg Intelligence. Now, let's stay in the tech space, and NVIDIA investors gave a cool reaction to its latest quarterly report, which blew past estimates, failed to satisfy the massive expectations of shareholders who have bet heavily on the AI boom. You can see NVIDIA down 1% pre-market. So let's also switch gear and talk about the economy. The German government is dealing with the fallout from a shock budget ruling. Now, the country's top court ruled it unlawful to reallocate 60 billion euros of COVID-19 funds. So with me now, Catherine Nice, Chief European Economist at PGIM Fixed Income. Catherine, as always, great to have you on the program. I have a million questions on actually some of the fiscal space, some of the things that we're seeing in the stability report. But what's going on with Germany? Are you worried that actually this snowballs into significantly weakening the government and what they can spend?
Well, it's a fluid situation, and I think the bottom line is we don't yet know what the impact is going to be. But my gut reaction to this is that, at least from an immediate kind of macro perspective, that this is not really going to shift the dial, and for a couple of reasons. Firstly, often when Germany says it's going to spend a certain amount of money, it doesn't often spend all of that.
Fair.
And so if you take it away, it's we're not taking away the full 60. We have to remember that this 60 billion in any case was being spread over 3 years. So really we're talking about 20 billion. I think there are some things that they can do at the margin in terms of cutting expenditure, raising revenues that could help kind of make the sums add up. So I think it won't be very impactful. And in any case, our euro area expectations for next year, I don't think we ever really expected Germany to be the engine of growth. So this isn't really changing my view on the macro outcome. But, that could change as this develops.
Catherine, at the same time, so we had this financial stability report. It does seem that the overall backdrop has improved. What do you worry about the most, though, for the European economy?
So I haven't seen the report. I'm not surprised that they're saying that the risks have receded. You have to remember the last time they wrote this was on the back of the SVB fallout. Interest rates were rising rapidly. Central banks were doing QT. So it really felt like there were, risks on multiple fronts. So I think it's good that it's receding. I would say the biggest risk, and from your headline, I think this is what the FSR is saying, is really a very rapid deterioration in the euro area economy. It's not what we're expecting, but that would create financial stability risks. And I don't think that we can take external shocks off the table, a negative supply shock. We've got these geopolitical risks, or potentially maybe Japan monetary policy normalization. So those are the kind of external shocks. No. But I think at home in Europe, the big worry will be, is this economy really going to start to deteriorate rapidly?
Yeah, and this is, partly also because of hikes. We're also looking at quite a lot of data coming from the U.S. What does it mean for your fixed income space? Like, what do you want to buy into now?
So it looks to me a little bit like the market's gotten ahead of itself in terms of pricing in these cuts, particularly in the euro area. We can't forget the ECB has a very narrow mandate. They're very focused on price stability. And because of these external shocks, I think that's asymmetric for inflation. So I'm not expecting cuts to come from the ECB until well into 2024. So I think the market's probably a bit too excited there. For the UK, I think that's a tougher call. And in the US, we are expecting some moderation. And there, I think the cuts to interest rates are more about adjusting peak rate rather than embarking on some sort of aggressive easing cycle, because the Fed is worried that the U.S. economy is rapidly deteriorating. So that's my expectation in kind of fixed income space.
Okay, Catherine, hold that thought, because we'll come back to you and we'll talk a lot about the autumn statement. Catherine Nice there from PGIM. Coming up, we're live in Westminster ahead of the UK autumn statement. A little bit later, we'll also hear from the Shadow Chief Secretary to the Treasury right after the break. This is Bloomberg.
What's the best investment advice you've ever been given by anybody?
The compound interest, the compounding of returns is an incredible miracle of business, finance, and human existence. Everything you learn is additive every day, and if you keep at it and don't quit, it's an incredible miracle. And it's not just interest. It was always said about compound interest returns, compound business returns, compound human returns. They're all very additive because you learn every day. And if you keep at it, it's very, very helpful.
In your observation of investors, what do you think is the biggest mistake that average investors make?
Selling at the wrong time.
And they sell when the prices go down?
Yes. Or yes. Not keeping, look, people have conviction, or they invest for if they invest for the right reasons, just keep at it.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
In a few hours, the UK Chancellor of the Exchequer, Jeremy Hunt, will deliver his autumn statement. Now, personal tax cuts could be on the way, as well as a plan to boost business investments by £20 billion. Let's go to Lizzie Burden, who's at Westminster now with a guest. Hi, Lizzie.
Hi, Francine. Yeah, I'm joined by Darren Jones, Shadow Chief Secretary to the Treasury, in a very noisy, busy Westminster this morning. We've got some music, so maybe we can speak in rhythm. Darren, I just want to talk to you about the Stonehaven poll published by Bloomberg this morning that shows that the Tory path to denying you a majority is actually tighter than previously thought. Is Labour concerned by that?
Look, we're very confident going into the next election because the Labour Party has changed under Keir Starmer and Rachel Reeves. We think our offer is the right offer for the country. And of course, the Conservatives are going to fight to hang on at the next election. But the autumn statement will show today that after 13 years of economic failure, their plan has failed. It's time for a change in this country, and we obviously think that needs to be a Labour government at the next election.
Is it responsible to cut taxes now?
If they're affordable and fully costed, we agree in the Labour Party that taxes on working people need to come down, because on average families are paying £4,000 a year more in tax. And people will be saying, never have I paid so much tax, but what am I getting for all of that money when our public services are on their knees and the economy is heading in the wrong direction? So as long as the maths add up, we support the announced cut on national insurance today.
But how would you balance tax cuts with public spending? Because philosophically, you're more towards the public spending end of the spectrum, aren't you?
Well, we support public services. We created most of them in the Labour Party in our history in government in this country. And people rely on a health service that works, schools that educate our children properly, proper policing on our streets. But we can only pay for good public services if our economy is on the right track. So the projections on economic growth are really important. Under the Conservatives, according to the Bank of England, that's 0% of economic growth. We have a very comprehensive plan for growing the economy so that we can pay for our public services more effectively over time.
Well, are you therefore concerned that the fiscal headroom you may inherit from the Conservatives if you become a government is going to make it impossible to enact your plans?
Well, the Tories, over 13 years have been increasingly economically incompetent. And we've got to the point where in March last year, the fiscal headroom was about £6 billion. You would normally expect 20 to 30 billion quid down the back of the sofa just in case. So they've been running it very, very close already. And that's why today it's going to be really important that we look at how all of their announcements add up and how they're paying for it at a time when we need to see debt reducing as a percentage of the size of the economy, not going up.
But of course, we have been through a pandemic and a cost of living crisis. If you got in, would you have to delay the £28 billion of investment even further?
So we said we're going to ramp up to that by the end of the Parliament, so over 4 or 5 years. But all of our policies, whether the Green Prosperity Plan or others, are subject to our fiscal rules. So we have to get debt falling as a percentage of the size of our economy over the course of the next Parliament, and that's what we will do.
Are you being honest, though, about how quickly you could move?
Well, government's actually not very good at spending capital as it is. On average, £1 in every 6 goes unspent. And actually, most of our focus is how we unlock lots of available private capital into the projects this country needs. So we think that where we invest £1 of public money in the sectors or technologies where we have to de-risk them because they're not yet fully commercially viable, we can crowd in at least £3 of private sector finance.
And your party's made big efforts to get buy-in from business. You said that you would make full expensing permanent. Can you afford that alongside your green commitments?
Well, it looks like the Conservatives are going to announce that today, which we welcome. We've been calling for that for some time. In fact, the Conservatives were attacking the Labour Party not very long ago for calling for this, even though we've been hearing from business this is a great way to unlock investment in our economy. So if it's announced today, it will have to be fully costed, and again, we'll check the maths, but if it's fully costed, then we will carry that through into government if we win the next election.
In terms of the approach to welfare, do you agree that you do need to use a carrot and a stick to get people back to work? The Shadow Chancellor herself says that there are some people who play the system.
So we've long said that the work capability assessments need to be reviewed and reformed. We approved that. It was called our National Policy Forum not very long ago in partnership with the trade unions. Of course, there have to be rules around welfare payments, and we want people to be in work. We are the Labour Party. We're the party of good work. But it's important that the system helps people to get back into work. And it's no coincidence that there are 2.6 million people out of work and over 7 million people waiting in the NHS backlog.
So that's the carrot, but what would be your stick?
Well, the conditions that are in place for welfare payments are pretty well established, and if people who are capable of working are choosing not to work, there are already sanctions in place. But it's important that job centres and other parts of the welfare system support people to get back into work, as opposed to just punishing them with a sanction at the end if they've not had that support to get back to work. But we do think the backlog buster policy that we've announced to get people seen more quickly in the National Health Service, especially for things like musculoskeletal pain and mental ill health, will unlock a lot of available labour in the market for people to get back to work.
All right, Darren Jones, Shadow Chief Secretary to the Treasury, thank you for joining me. Francine, we'll get that autumn statement at 12:30 in the House of Commons after Prime Minister's questions.
Yeah, thank you so much, Lizzie. And we'll have a full show, of course, to go with the autumn statement to understand where that leaves the UK in terms of fiscal space, where that leaves the UK in terms of the economy. Lizzie Burden there with Darren Jones. Now, let's go back to Catherine Nice, Chief European Economist at PGIM Fixed Income. Catherine, first of all, thank you for sticking around. It's clear that, I guess, the UK has a little bit more fiscal room, but still, I guess, not as much as most G7 countries that we're looking at. So what kind of autumn statement are you expecting from the Chancellor?
I think big picture is that we're not expecting anything to be macroeconomically meaningful to be announced at this statement, that really they will save the big bazooka for spring for two reasons. One is it will maybe give them a bit more confidence that some of the good news that we've had on revenues is actually, not just a kind of a one-off, that it's a bit more sustainable. And secondly, I mean, I'm not a political strategist, cautious, but that, you know, it could be more helpful to make these announcements in the spring nearer to the time of the election. So I think, and then the final reason is, you know, we've got a bit of a bad memory perhaps from this time last year when we had a similar sort of announcements. So I would have expected that the key focus will be to kind of hit on some key messages, maybe a little bit around tax cuts because of this good news, a big focus on supply side, get the economy to grow, but crucially that all of this stuff has been added up and been vetted by the OBR, so it's costed, and no big surprises. I would have thought that that's what they're aiming for.
Catherine, I mean, overall, if you're an investor, and Rishi Sunak is also doing this Global Investment Summit on Monday with many people from, you know, Wall Street, the heavyweights coming over, but what's the kind of investment opportunity in the UK? Things look cheap, but there are elections, you don't know who's in power, and there's been flip-flopping on certain policies.
Yeah, so I would say that there's two things. I mean, one of the big measures that we're expecting today is this expensing of capital allowances to be taken, extended beyond its end date. And I think this is potentially really important for the UK because the UK really does look like an outlier and not in a good way when it comes to investment compared to G7 economies. We are the lowest at 19% of GDP. Italy, US are higher at 20-21%. Japan and France are way higher at 25%. You know, 1%, 5% of GDP in these countries, these are big numbers. So it is notable that the UK is lower. We have seen that this super deduction looks like it is having a boost on investment in the UK. We saw big growth in the first quarter of this year. So I think that is potentially creating, you know, a more friendly investment environment for the UK. But if we look at what businesses are telling us, the Bank of England looks at a decision maker panel survey, for example, businesses do cite uncertainty. You know, it's alongside the tax, incentives. I think a business environment that is certain, where you have a degree of confidence of what the world is going to look like in the future, is important too. So I think governments can do a lot to sort of create that degree of certainty for investment.
Catherine, thank you so much for joining us today. Catherine Neisser, Chief European Economist at PGIM Fixed Income. Now, coming up, Israel approves a deal that will see Gaza hostages released in exchange for a pause in fighting. A closer look at the agreement is coming up next, and this is Bloomberg.
CFOs are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders.
Today's CFO has to be much, much more than a bookkeeper.
One of the most important things is looking around the corner.
We have to let go of the traditional legacy department store.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
You also have to be credible business leaders in order to really impact the business and steer the direction.
We're like biologists. We need to deeply understand the financial DNA of a company.
People just come with a playbook and say, okay, we're going to roll that. Don't do that. Think longer term.
It's an amazing time to be in this role. It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. A new episode every month, only on Bloomberg. Business Week Radio. Live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
U.S. President Joe Biden has welcomed an Israeli deal with Hamas that will free about 50 hostages from the Gaza Strip. Now, the agreement, which was mediated by Qatar, includes a 4-day pause in fighting and the release of some Palestinian prisoners. Now, for more, we're joined by Bloomberg Opinion's Mark Champion, who's been following this very closely. So, Mark, what is the deal and what does it mean for the war?
Yes, so essentially there'll be 4 days of no fighting. Hamas will have to hand over 50 women and children from among the 240 or so hostages that it took on October the 7th. The Israelis, in return, will release about 150 women and children from the prisoners they hold in jails. And then, there are various other details, such as that hundreds of trucks of aid, including fuel, would be brought in to help with civilians, and also that there will be no overflights in the south, limited times of no overflights in the north, which will kind of limit surveillance and so on. So what it really means is Prime Minister Netanyahu has made it very clear that this is not the end of the war. The Qataris who mediated the deal said they hope that it can lead to a permanent ceasefire. The Israelis have said no, the war will restart. It is possible that it can get extended by daily if Hamas releases 10 hostages each day. It sounds like a sort of truly inhumane calculus, and it is. Militarily, the hostages are extremely important, primarily because the worst of the fighting that the Israelis will have to do is underground in Hamas's tunnels. That's where the hostages are. And the more hostages that you can get out of those tunnels, the more freedom the Israeli Defense Forces will have to use means other than just going into tunnels where their normal equipment, like night vision, communications, and so on, just doesn't work, and they're at a disadvantage. Normally, what they would want to do is flood the tunnels, for example, but they just can't do that so long as the hostages are there. So that's the really brutal calculus. Hamas won't want to give up so many hostages that the tunnels can just be flooded, and the Israelis will want to get as many out as they possibly can.
Mark, thank you for the update. Bloomberg Opinion's Mark Champion. Of course, we'll have plenty more on this throughout the day. Also coming up, will OPEC Plus extend oil production cuts, or will they deepen them? Well, we look ahead to this week's key meeting with Enduron Capital Management's Pierre Enduron. He's next, and this is Bloomberg.
think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
DOJ or other authorities.
Could face bigger challenges next.
Fed was going to keep rating World Cup. This is a 3.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Dramatic reversal. Sam Altman will return as OpenAI's chief executive along with a board overhaul. Meanwhile, NVIDIA's results receive a cool response, sending the shares a little bit lower. Israel and Hamas agree on a plan to free dozens of hostages from Gaza in return for a 4-day pause in fighting and the release of some Palestinian prisoners. Plus, boosting business, while the UK Chancellor Jeremy Hunt is expected or is set to announce permanent tax relief on investment spending in his autumn statement a little bit later. We also have a full dedicated show to the autumn statement. But good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. So let's focus on oil, and oil prices have steadied ahead of an OPEC Plus meeting over the weekend. Now, the group will decide on continuing cuts to output on signs of another stockpile buildup in the U.S. Now, let's find out more on all of this from the founder of Endurant Capital Management, Pierre Endurant, who joins us now. Pierre, thank you, first of all, for joining us. I mean, OPEC Plus is always rather exciting because they've surprised, you know, in the past, but actually, if you look at the price of oil, they've always been right. What are you expecting them to do this time around?
So it's a bit tricky. So I think the Saudis would want to see higher prices. But when you look at current OPEC production or OPEC plus production or exports, over the last month or two, they've been the same as the average of the last year. So despite all the announcements of cuts, OPEC plus as a group has not cut much production at all since last year. Saudis cut, but against that, and Russia did like marginal cuts. But against that, we had a lot more oil from Iran and more oil from Iraq and from West Africa. So overall, like we haven't had like much OPEC plus cuts. So I think the Saudis will probably want the other countries to cut as well. So I think it's going to be a negotiation where the Saudis will probably use that lollipop cut as a potential stick if the other countries don't cut more. And why I think we need a cut is actually we had much larger U.S. supply growth than expected this year. So we're at 1.5 million barrels a day total liquid growth relative to last year, which is one of like in the top 3 supply growth in history in the U.S. So like we were expecting much lower supply growth. And also a lot of Iranian oil came back, and we didn't lose any Russian oil pretty much, and we had more oil from Iraq and West Africa.
Pierre, so what does a meaningful cut actually look like that you think will be achieved? I mean, there's so much geopolitical uncertainty as well. I wonder whether everyone's a little bit in a wait-and-see situation.
Yeah, I think in terms of geopolitical risk, people, wait for something to happen before positioning for it, because I think so much money has been lost positioning for that, and then nothing happened. So look, last year Russia invaded Ukraine, and we didn't lose any oil, and we got some SPR release. So actually, it was a bearish event for the oil market. Since 2005, people have been positioning for a war with Iran and losing money because it never happened. So I think the market generally tends to discount potential geopolitical risk, wait for those supply disruptions to happen, and then the price moves. So I don't think it's over, and potentially we could have disruptions, but they have not happened yet. So I think we have to go back to fundamentals, looking at supply growth versus demand growth. Demand growth is very strong, so despite all the fears of a really weak macroeconomic outlook, demand growth this year is estimated to be around 2.3 million barrels a day, which is twice the average, an average demand growth. So demand growth is not the issue, and we still have some recovery to happen post-COVID, because some countries have not fully reopened, mainly in Asia. So I think there's still a bit more demand growth to come. But the supply has been the issue, a lot more supply than expected.
But so you actually started the year by calling, I think, oil to be at around $140 a barrel.
Yeah.
Are you sticking to that, or are you
No, not
to bring
really,
that
because
down?
bring it down because we had a lot more supply from Iran. I didn't expect, the U.S. administration to close their eyes on and to stop enforcing Iranian sanctions. So Iran exports pretty much as before the sanctions. And U.S. supply growth is probably 700 to 800,000 barrels a day higher than expected. And then we didn't lose oil from Russia. We got more oil from Iraq and West Africa.
So what's your new forecast?
It will depend a lot on what OPEC will do this weekend, right? So it's hard to stick your neck out. The markets right now are finely balanced. They are not massively oversupplied or undersupplied. It's like finely balanced. So it's all at the margin. If OPEC does a cut that's large enough, so I would say like 1 million barrels a day lower relative to current production, then the market will go up. If they try to micromanage the market, month to month, I think it will stay here or go a bit lower. And if the other OPEC members do not want to cut, and Saudi have to be the only one cutting, I think they will give up and potentially bring some production back online, and then we'll go much higher. So it will depend a lot on that meeting. So I'll have probably a better opinion on Monday.
So you'll come back on Monday.
Yeah.
Pierre, how's your fund doing? I know you've had some ups, you've had some downs. How difficult is it holding on, first of all, to your clients?
Holding to the clients is okay for now, because most of them have been with us for a very long time. So they've seen a lot of good years, and so they don't, leave at the first sign, we recovered in the past of large drawdowns. It's just about being patient. I know that for me, the worst kind of markets are those kind of markets where there's no clear direction and it's very volatile. I mean, for the last year and a half, we have many times where oil prices would go down $10 in 1 or 2 days for no reason and then go back up. And so when you have like a strong view, and then strong view means like a strong position, you end up being chopped by that volatility. And I've always done, badly in those type of markets, but they tend to be maybe 10% of the time we have those markets, and then we have the markets that are more obvious, where it goes in one direction for some time, and then that's when we tend to do well.
So why do you think it's these kind of markets that we're living with? Is it geopolitics at the margins that are so difficult to read, or is it actually countries that have behaved in ways that you weren't expecting?
I think it's a lot of random events, right? As I said earlier, it's the fact that you have a lot of countries raising production at the same time, some cutting, and basically, it's, at the end of the day, what makes the oil price is supply minus demand. When inventories go down strongly, prices will go up, and vice versa. So when you're in a situation where you have the supply increase, meeting the demand increase, and there's a lot of, and it's hard to forecast what the supply increase will be next year and the demand increase, and the markets are volatile and they don't go anywhere, and that's when it becomes choppy.
Yeah, what's your take on China? Again, this is the biggest unknown. We saw foreign direct investment going into China, I think negative for the first time since on record.
Yeah.
But it's unclear, again, they're opening, we don't know how much support the government will actually give to some of these real estate developers.
Well, it's, I think they want to be careful because there's been so much speculation going into real estate, like prices are just so high. So I think it's, I'm not sure they'll come with a bazooka. I think it's going to be like marginal help. But for the oil market, I don't think that the Chinese real estate market, is such a driver for oil. I mean, it can be like a marginal plus, but it's not what's going to drive the market going forward.
So what's your outlook for the oil markets in 2024? There's a lot of unknowns.
Yeah, it's a lot of unknowns, so it's hard to have a strong opinion now. So I think it will depend a lot on what OPEC decides on Sunday, really.
If we have Trump back in the White House, does that change also the course of the price of oil, or certainly how much they'll produce?
Maybe. I don't think it will change anything for the U.S. supply, because despite all the talk that Biden was hard on production growth, well, we have one of the top production growth ever, like in the U.S. So it's more driven by technological improvements and these kind of things. And but where it can have an impact, if Trump was to come back and he goes hard on Iran and he goes hard on Venezuela, then we lose some oil, and it could be marginally positive for the oil price. So it's going to be more from, like foreign policy than domestic policy.
But you're not. I mean, a lot of actually expecting a surplus in the oil because of the economy going down and a lot of supply out there. Do you expect a kind of a significant downturn in some of the Western economies?
Well, the thing is, when you look historically, if you have like a normal recession, like you don't lose much oil demand. It's quite marginal. You lose like 500,000 barrels a day relative to an average year. And so it's nothing relative to what OPEC could cut or how much supply could disappoint. So I think on its own, it's not enough. Like a weak economy or even a recession is not enough to bring prices down. But if you have a weak economy coupled with a very strong supply growth in the US and OPEC not cutting, then yeah, of course it's negative for oil prices. But on its own, when you look historically, we had 2008-2009 brought like a strong demand decline, but that was not because of a recession. It was a full-blown financial crisis, right? The world stopped. And then obviously the pandemic, the COVID pandemic. But when you look at average recessions, you don't lose so much demand. It's quite marginal.
But so if you look at the markets and the way there's positioning on the oil markets, but also in treasuries and everything else that you look at, what are people misunderstanding? What are they getting wrong?
I don't know if they're getting it wrong. I mean, so far it's no more me getting it wrong. But I would say like the positioning for oil, the hedge funds are very short, or at least the speculative lens is close to all-time low. So I think they're looking at, I mean, it's hard to know what they're looking at because you have a lot of different funds, but I think the macro community in the US is probably focused on demand growth disappointing, like a weak economy to come, and then like weak demand. But so far demand kept on being revised up, so they've been wrong on that, on that point. Will it come next year? Maybe not, because I think there's still some demand recovery from post-COVID to come, so I don't think demand will really be the issue, but the funds are actually quite short now, and they're short going into a big OPEC meeting. So, and I think Prince Abdulaziz probably knows that they're short, and he might want to surprise them, but I think it's the other countries will have to cut as well.
Yeah, I mean, going into this big OPEC plus meeting, what do you do? How do you actually work? Do you take a big position before? You just wait and see and then decide?
I think it's better to wait and see. I think it's more likely that it will be a bullish outcome, but there's also a low probability event that it might be a very bearish outcome. I think it's more like a 10 or 15% probability in case the other OPEC members do not want to cut. And so there's a 10% probability maybe that we go much lower as well. So in a way, I think you probably want to be positive going into that meeting, but be careful of the sizing in case something bad happens. And generally, the market doesn't price news right away. It tends to diffuse over time, so it's better to wait for the result, analyze it, and then if it's obvious, then put the position after.
So interesting. Pierre, thank you so much. Founder
Pleasure.
there of Endurant Capital Management, Pierre Endurant, joining us on the price of oil and supply and demand. Coming up, Binance and its chief executive officer plead guilty to criminal charges, agreeing to pay a $4.3 billion fine. More on that story next, and this is Bloomberg.
The younger generations are more, of course, pay more attention to sustainability, and so they are looking at brands that are greener. But you have to make sure you're authentic because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why part of the big transformation of our R&I, where there's this €1 billion we spend every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Today, Chancellor of the Exchequer Jeremy Hunt delivers the UK's autumn statement. Will he deliver tax cuts? What is his plan to grow the economy? Can he set up the Conservative Party for a win next election? Live from the Houses of Parliament, Bloomberg Television brings you up-to-the-minute news and analysis. Special coverage begins today with Hunt's remarks starting at 12:30 p.m. London time. Bloomberg, context changes everything.
Binance and its chief executive, CZ, have pleaded guilty to money laundering and U.S. sanctions violations. Now, the sweeping settlement with U.S. authorities allows a cryptocurrency exchange to continue operating. Well, joining us now is Bloomberg's senior crypto editor, Anna Herrera. Anna, good to speak to you. So what comes next for Binance?
So this will be a super interesting story to follow, right? Richard Teng, the new CEO, takes over one of the biggest companies in crypto and probably one of the toughest jobs in crypto at the same time. He has to restore confidence in the exchange. They're still the biggest, but they've been losing market share. And at the same time, he has to continue to appease regulators in the U.S. who will continue to follow what the exchange has been doing. So he has to turn around this massive organization, which, as we've seen, has had massive compliance issues from the beginning. And how do you do that? Will he have enough power to do that when he comes in? So for sure, it's definitely one to follow.
So what does it mean for crypto as a whole, Anna?
I mean, again, it's the biggest exchange. So whatever happens to Binance tends to impact what happens to crypto. We'll have to see if there are, one of the biggest issues is, will there be outflows from Binance? Because that's what we saw with FTX, right? People started panicking, they started taking money out, and then there was a sort of run in the bank. So if that doesn't happen, and it doesn't really seem to be the case for now, then perhaps price will remain somewhat steady. We haven't seen that massive drop in Bitcoin, which you would expect for this magnitude of news, but maybe people are getting used to big crypto executives, getting into legal trouble by now.
Anna, thank you so much. Anna Herrera there of Bloomberg News. Now, France's top diplomat, Catherine Colonna, is visiting China after a European probe into Chinese electric vehicles raised fears of a potential tariff war. European car makers, including Stellantis and Renault, are exposed to rising imports of cheaper EVs from China. Now, France is expected to unveil support for local EV producers next month that will likely exclude China-made vehicles due to their carbon footprint. Now, the iconic car maker, also Ferrari, famous for its roaring engine, is embarking on a new era as it switches to electric. I sat down with the company's chief executive officer, Benedetto Vigna, in the latest episode of Leaders with Blackwell Goes Green.
We have a very detailed development process. So we have what we call technically mulotype, prototype, before we end up with the production of the final product. So it's very much detailed. It takes several quarters, and we test the car in different conditions. But it's very, very interesting.
What are you most excited about? Is it the sound?
The driving emotion, okay? The driving emotion, the performance, and also the design. They go all together. It's like three wheels, these three wheels, moving at the right speed, all together. And then these three is all encompassed by the sustainability.
The Ferrari chief executive there, Benedetto Vigna. Now you can see that full interview on Leaders with L'Aqua Goes Green, airing at 9:30 p.m. New York time tonight in the U.S. and then 6:30 p.m. London time on Thursday. Now coming up, near non-stop talks are taking place to resolve the budget crisis in Germany. That's after a shock ruling by the country's top court. More on that story next. And this is Bloomberg.
What's the best investment advice you've ever been given by anybody?
The compound interest, the compounding of returns is an incredible miracle of business, finance, and human existence. Everything you learn is additive every day, and if you keep at it and don't quit, it's an incredible miracle. And it's not just interest. It was always said about compound interest returns, compound business returns, compound human returns. They're all very additive because you learn every day. And if you keep at it, it's very, very helpful.
In your observation of investors, what do you think is the biggest mistake that average investors make?
Selling at the wrong time.
And they sell when the prices go down?
Yes.
Or
yes. Not keeping, look, people have conviction, or they invest for if they invest for the right reasons, just keep at it.
Of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg. Context changes everything.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, the German government is considering a complete overhaul of its year's budget to help to comply with a shock budget ruling by the country's top court. Now, the Federal Constitutional Court ruled last week that it was unlawful to reallocate 60 billion euros worth of unused COVID-19 debt. Well, let's go live to Frankfurt and Bloomberg's German bureau chief, Christoph Rauwald. So, Christoph, it's hard to overestimate, actually, the potential impact of this judgment.
Yeah, it absolutely is, because it affects essentially investments, long-term investments across a wide range of different sectors that really rely on the state-backed funding to invest in anything that's related to new technology. In Germany, electric vehicle infrastructure, the semiconductor industry, just to name two examples, and all these investments are probably under review to some degree because the federal budget needs to be there to support that.
So what exactly are the options on the table?
Well, the main option seems to be that the government might move to suspend what is in Germany called the debt brake, which limits borrowing for like another fourth consecutive year, basically. That would give them the required leeway to actually disperse these funds and make these investments possible again. Having said that, that is something that, like, the German finance minister, Christian Lindner, has been very opposed against, because his pro-business Liberal Democrats, one party of the three-way ruling coalition in Germany, is fiercely against, has been fiercely against that in the past. So they would really have to sort of overcome their current position.
So what does that mean going forward, actually? Are we underestimating or overestimating the impact that this will have also, you know, going forward on how things operate in Germany and therefore the rest of Europe?
Well, if they can't deliver on that or come up with a solution that would again or could again be challenged with like a legal challenge, as we've seen last week at the top German court in Karlsruhe, then that would basically force them to make pretty painful cutbacks across the entire budget, and that would really threaten potentially the entire coalition or the existence of the current three-way ruling coalition between the Free Democrats, the Social Democrats, and the Green Party. And that would be, of course, something that would have major ramifications across Europe as well.
All right, thank you so much, Christoph Hauwald, their German bureau chief. Now, we'll have plenty more, of course, from Germany. Also, shares in Siemens Energy fell nearly 12% after the head of Gamesa, its troubled wind turbine unit, said he could not rule out further potential equipment defects, even after the company's internal review. Now, Gamesa has had to halt production of its newest turbines after technical flaws were found. A program of corrective measures is set to cost around 1.6 billion euros, and Gamesa has announced plans to cut 400 million euros in costs by 2026. Now, Siemens is down about 37% this year, following reports that the German government will intervene to help shore up its balance sheet. Also, voting is underway in the Dutch general election, where the far-right populist Geert Wilders has jumped to first place in the latest polls. Now, he looks set to benefit from the political vacuum left after the coalition of the former Prime Minister Mark Rutte collapsed over its refugee policy. Wilders' Freedom Party is projected to win 28 seats in parliament, just one more than the two parties tied in second place. Now, this is what NVIDIA is doing. There's not a huge amount actually going on with the NVIDIA share price. As we speak, it's down 1%, but extremely important pre-market to have a look at it, given everything else we've had in this space. Also, OpenAI will bring back Sam Altman and overhaul its board with new directors, and stunning reversal in a drama that's really transfixed Silicon Valley and the global AI industry. Now, let's have a look at what stocks are doing. They were mixed earlier this morning. I think today they're a little bit on the upside. The dollar's gaining before some of the U.S. economic data. So, again, policymakers seem to be united around the strategy to proceed carefully on future interest rate moves, but also base any further tightening on progress towards their inflation goal. Now, this has a lot of focus, or will impact a lot of the decision-making when we get some jobless claims out of the U.S. today, also durable and capital goods orders, but also consumer sentiment later today. That may, of course, as always, provide some of the clues on the direction of monetary policy after we had minutes of the Federal Reserve's last rates meeting revealed that officials remain in a cautious mode. Now, a reminder, we'll also have a special coverage of the UK autumn statement later today with the Chancellor of the Exchequer, Jeremy Hunt, speaking at 12:30 p.m. London time. You can catch that on TV on the terminal and online. This is Bloomberg.
baby boomer generation, and this generation is now increasingly dealing with problems relating to Alzheimer's, dementia, and so forth. Not particularly my age, but maybe some people my age, even younger, but obviously in their late 70s, 80s, and 90s, more and more we're reading about Alzheimer's. Is this an epidemic that you can't really do anything about, or is it something we can deal with in some way?
It's a real challenge for a lot of families, mine included. You know, I have a 90-year-old grandmother at home who's struggling with dementia, and providing care for her has been a real challenge. And for my family, we love her dearly. We want to be there for her, but where it's painful for us to see the toll dementia has taken on her. This is rightfully, a concern for families across the country. We're investing a lot in studying dementia, to not just Alzheimer's, but other forms of dementia, to understand what's driving it. But very interestingly, there's also some research that's taking place, lifestyle research, if you will, on the impact of diet, of social connection, of physical activity, and sleep on dementia as well. Dean Ornish, professor at the University of California, San Francisco, has been actually one of the key folks, who has been leading some of that research on the impact of lifestyle and dementia. This is a promising area.
Good morning from our world headquarters in New York. I'm Manus Cranny.
And from our studios in London, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
A dramatic reversal. Sam Altman will return to OpenAI as CEO, with an overhaul of the board underway. NVIDIA fails to satisfy the lofty expectations in the forecast generated by the AI boom, despite a growth surge. Plus, Israel and Hamas agreed to the release of hostages and a pause in fighting, while Netanyahu stressed the agreement doesn't mean this war is over. You're waking up, it's 5 a.m. in London. What's your NVIDIA stock worth today? It dropped by 6% on the $20 billion guidance yesterday. We're down just under 1% at the moment. So we dropped by 6%. We managed to claw back at nearly 5% of that at the end of after hours. This stock is up 241% so far in this year. Are you long? It's worth more than Intel. Maybe that's the differentiation in terms of the intellectual property. To stocks this morning, you look at it, S&P futures just clinging ever so slightly to the green. Volumes are 18% lighter than normal. We are in a pre-Thanksgiving mood. What is your risk? Proceed carefully. That's certainly the message that came from the Fed minutes. Proceed carefully with caution from the Fed. S&P 500 is just off its 3-month high. There is a big note out from Subramaniam over at Bank of America, and it is a big bullish call on the S&P 500. 5,000 by next year. Why? You still have exceptionalism. U.S. exceptionalism is intact in U.S. stocks. Might not be in the dollar, but it is in stocks. You can expect a 10% rally. Now, when it comes to positioning overall in U.S. equities, I can tell you this. Goldman Sachs have tracked the hedge funds, and they are up to their necks in U.S. stocks. This is the most crowded trade ever for the hedge funds. And of course, the VIX, have a look at the VIX at the bottom of your screen. It's trading at 1304. Somebody out there, 50-cent style, remember that 6 years ago? Massive punter, buying volatility just like they did 6 years ago. It's 130,000 call options. The 18 strike call options were the big purchase. Stock 600, Sage is on the up, which is on perhaps their AI story. But we've got a big note out from SocGen. Strategists are saying it's going to be a flat 2024 growth story. story in Europe, and the risk is this: a 10% correction in the first half. But don't worry, Danny, the central banks will save us.
Oh, will they, or do we not care because it's a holiday-shortened week? Do you really want to make a bet right now as everyone's about to go offline and stuff their faces full of turkey? We did get a rally yesterday in the U.S. bond market after that proceed carefully narrative. It was led by the front end, but we are giving back some of that. We're higher by a basis point today. We still are under 4.9%. Was it the Fed, though, that ignited that rally, or was it the quants? Bank of America says that quant CTAs, those short-term momentum followers, have been buying the front end. They've been doing so since the CPI report, and they're going to continue to do it. Stock 600 was in there. I could have sworn that I had UK yields there a second ago. Maybe I'm losing my mind, but UK yields are also under pressure this morning. They are moving lower alongside the U.S. market. And the question traders have to ask themselves today is this time different? Chancellor of the Exchequer, Jeremy Hunt's going to unveil tax cuts. In September of last year, tax cuts from Kwasi Kwarteng rocked the gilt market. Maybe this time is different. Inflation is ever so slightly lower, and at the same time, the Office for Budget Responsibility is on board. Finally, Bitcoin down about 1/3%, fell 1.5% yesterday. We're going to talk about this, man. It's one of our top stories. Both Binance and CZ settling with U.S. authorities, pleading guilty to money laundering and at the same time sanctions violations. Now, Manis, you mentioned Savita Subramanian talking about U.S. exceptionalism is intact. I would counter to you that it's not U.S. exceptionalism, it's U.S. tech exceptionalism. We have this chart, which is kind of halfway showing up, halfway not. Apparently, European stocks really want to be seen this morning, Manis. There we go, they're gone. Okay, we're up 46% on the NASDAQ 100. That's only happened 6 other times in history. And Manis, let me set the record straight. This chart is not from one of my spreadsheets. It's from you. I stole it from you this morning.
Did I hear you give me a little bit of a shout-out that I actually created something that we used?
I always give you a shout-out.
This is a first, actually, to be fair. I mean, you know, we talked about NVIDIA opening down 1%, and that is a pretty magnificent chart. It's still, you've got, you know, Microsoft at a $3 trillion market cap. NVIDIA's worth $1 trillion more than Intel. It's such a crowded trade, though, Danny. It really, really is.
Yes. Yeah, and maybe that accounts for some of the weakness we've seen pre-market for NVIDIA.
I'll just say this, too. Do you remember August? Whoop, down she went by 9%. You know, don't count your chickens before you hatch. You got 5 weeks left to run.
I barely remember yesterday.
Listen, I can barely remember 5 minutes ago. Never mind 24 hours ago. It's like an eternity away. Myself and a brokerage account, a lot of emotional breakdown between myself and a number of US brands. We'll come back to that a little bit later in the show as we settle in. Let's talk about the dramatic reversal, eh? Sam Altman, what a blinder. Coming back at OpenAI as the CEO. Altman announcing the reinstatement, stating, quote, this: with the new board and with Satya's support, I'm looking forward to returning to OpenAI and building on our strong partnership with Microsoft. Alex Webb is with us. Wow, I mean, it's day 7 in the Bloomberg Big Brother house tracking Sam Altman. What changed in the past 24 hours? What did they offer Sam Altman to come back? We don't even know why they fired him yet.
No, I mean, it's clear as maybe slightly translucent mud. We've got about, it's been, yeah, as you say, less than a week since this all kicked off. The thing that's really fascinating about that statement is he essentially makes 2 allusions to Microsoft. He says he's doing it with Satya Nadella's support, and he's looking forward to working with Microsoft again. The read here, this is a big victory for Microsoft. Some of the reporting suggesting why it maybe took so long, although, you know, it's still been moving very, very quickly. I heard someone describe it to me yesterday as succession for the TikTok generation. Essentially, it was the composition of this board that was the question. We know now there are going to be 3 board members at least: Larry Summers, Brett Taylor, former co-CEO of Salesforce, and the CEO of Quora, Adam D'Angelo, who was an existing board member. We're going to see as many as 9 additional members. And remember, when Satya Nadella spoke to Bloomberg TV on Monday, he said he wanted better governance. The read on that is he wants Microsoft to have a seat on that board, maybe just an observer, maybe active board members.
I can't wait to watch the 30-second HBO special on the OpenAI saga, Alex.
Wait till our special on the OpenAI saga.
which will be longer than 30 seconds, yes, I hope. Exactly. I can't wait, Alex. That's Alex Webb. And we should note that the new OpenAI board member, Larry Summers, is both a Harvard University professor and a paid contributor to Bloomberg TV. A lot to cover in the world of AI. Joining us now to do that is Tiago Kapulskis, head of global tech research at Itaú BBA. Tiago, I mean, this whole thing has been really crazy. It's wild, as Mana said, that it's only been 7 days. It is a mess driven by this philosophical dispute. What does it tell us about AI in general going forward? Is there a bigger problem under the surface that perhaps we're not pricing in with the euphoria of AI?
It's a great question. First of all, thank you very much for having me here again. It's a great question. I have a perception that we're getting close to what we call the artificial general intelligence, even though there's not, I would say, solid evidence of that happening today. But I think we're getting closer. And look, I think that anything related to safety or, you know, in terms of any harm to anyone would be obviously a terrible end to the whole story. At the same time, I have a perception that Microsoft has, I mean, they are really good on this, right? They've had, for example, a board overseeing cybersecurity, AI safety for many years, I think since 2016. So I'm sure that like this subject is being treated with a lot of care and duty. But who knows what's going on there, right? So hard. Let's see what happens.
Tiago, there's so many known unknowns, excuse the pun, in this story. Our viewers are waking up this morning. It's 5:08. Nvidia is down 1%. Satya Nadella has effectively won on all fronts. He's now got a seat on the board of Nvidia. What do you think Microsoft are going to be pushing for? Is it going to be a road to take this OpenAI onto the market? Is it going to be better governance? What's top of the agenda for Microsoft with the board seat?
Look, great question. So I think number one is actually getting someone on the board, right? I mean, it's really tough for a company like Microsoft getting surprised by the dismissal of the CEO of the company that is, you know, probably the best investment Microsoft has done in years, if not decades, right? So I think like it's even from an investor standpoint, how come Microsoft doesn't have someone in the board, right there? So I think that's
right, and maybe look at that. You know, that definitely seems part of the discussions here. Tiago, to go to Manas's point of an Nvidia that's down 1% pre-market. I know you looked at these earnings and upgraded your price target to 640. That's about 30% higher than where it is right now. What's this market got wrong then? You think it should be up 30%? The market's sending it down by 1%.
Yeah, no, look, great question. I think, you know, the stock did very well past month, almost 20% up, right? It was like $400 when we actually called it is a more strong buy. I think a little bit more than 1 month ago. So there's that. I think there's some sort of digestion that could be on. But look, as we wrote in our report, we would buy any weakness because I think this was like sort of a good but in line quarter, as we usually say, right? So everybody was expecting already a strong guidance and strong numbers and etc. So not much surprise on the top line side. But if you look
okay, so Tiago, you're a buyer on any material dip. That's very clear. Now, everybody's bullish on Microsoft. You look at Nvidia, it's worth $1 trillion more than Intel. You've got everybody chipping away, excuse the pun, in this market. Microsoft are introducing their own processor. ADM have unveiled their product. What goes through my mind is how long can Nvidia stay at the top of the cliff and how quickly do we commoditize in this market? What's my risk owning Nvidia now in the near term? Is there anybody snapping at their heels? Yes or no?
Yeah, it's a great question. So I Look, I don't think we're on top of the cliff right now. And the reason is that I think it's very hard to replicate this business. Really, really hard. I don't think it's about the hardware. AMD is building something incredible. Microsoft and Amazon are trying to build things that are good. However, the CUDA libraries, the software side of NVIDIA, the fact that they have so many PhDs on board, it's very hard to replicate that. And it's very hard to replicate that rapidly, right? So is there a risk? Yes, there's always a risk. There's a risk of digestion. There's a risk that AI, you know, maybe tomorrow there will be less demand. Maybe because, for example, what happened on OpenAI, I'm sure there are many companies that are probably going to delay their projects a little bit. But we continue to think it's a good long-term investment. And again, we would buy the weakness. I don't think we're on the top of the cliff at this point.
Okay. Fair enough. There we are. I mean, weakness today, $495 is where we are in NVIDIA stock. Tiago, thanks so much for your time, for getting up early. Tiago Kapulskis of Itiao BBA. Manis, let's get to some of the other top stories that we've been tracking that are trending on the terminal this morning. Country Garden has been included on China's draft list of 50 developers eligible for a range of financial support. Now, this move signals a pivot by Beijing to help some of the nation's most distressed builders.
Citigroup is said to be in discussions to start a new direct lending strategy as early as January. It's the bank's latest push for a foothold in the booming $1.6 trillion private credit market, Danny.
And at 12:30 p.m. London time, UK Chancellor Jeremy Hunt delivers his autumn statement to lawmakers. Personal tax cuts could be on the way, as well as a plan to boost business investment by £20 billion.
Well, coming up, Hamas and Israel have agreed a deal to release 50 hostages from Gaza. It's a 4-day pause in fighting. More on the agreement right here on Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
This is Daybreak Europe. I'm Kriti Gupta. Let's get to the stories that set your agenda.
Taking you from the U.S. market's close.
A lot of this was priced into the U.S. session.
To the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
It's Bloomberg Brief. I'm Manis Cranney in New York, Danny Berger in London. Israel and Hamas have agreed a short pause in fighting to the release of hostages. Despite the breakthrough, the Israeli Prime Minister Benjamin Netanyahu said, quote, "There is nonsense out there as if after the pause in fighting, we will stop the war. We are at war and we will continue it until we achieve our objectives. We will eliminate Hamas, return all hostages and guarantee there will be no relent in Gaza that threatens Israel. Let's get to the Middle East now. Sam Daher joins us from Dubai. Sam, can you just lay out for our viewers, it's 5:16 in New York, what has been agreed and what are the aspirations of this deal?
Sure. I mean, Hamas and Israel have already agreed on this deal. There will be a 4-day ceasefire. 50 hostages will be exchanged in return for 150 Palestinian prisoners held by Israel. Hamas has also asked that all Israeli airstrikes on Gaza be stopped, as well as drone surveillance of the northern part of Gaza, where Israeli troops are concentrated. Obviously, if everything goes according to plan, this is supposed to be in motion tomorrow, Thursday. The International Committee of the Red Cross will play a key role in all of this. I mean, it's usually involved in these types of prisoner and hostage exchanges. Obviously, Qatar and Egypt have been playing a key role as mediators, but I think the U.S. has been playing a central role in all of this.
Sam, beyond negotiations on, if I can jump in, Sam, just beyond the negotiations on hostage releases and these sorts of humanitarian pauses, what about progress on real negotiations on getting a permanent ceasefire that stops the war?
Excellent question, Danny. I mean, that's what the Arab states are pushing for. And today you have 4 Arab foreign ministers in London, and they were just in Moscow yesterday and in Beijing the day before. And this is what the Arab states are saying. We need a permanent ceasefire before we talk about anything else. And they're describing the situation in Gaza as catastrophic. I mean, they are, the U.S. is saying, no, we need to talk about, what comes after the guns are silenced. We can't just wait, for the fighting to stop and then try to figure out what we're going to do next. And they cite their own experience in Iraq with regime change and what came after the toppling of Saddam Hussein. But these are very fraught and complicated, discussions. The U.S. is assuring its Arab partners that there will be no displacement of Palestinians in Gaza, that the territorial integrity of Gaza will be maintained, and that the Palestinian Authority will play a key role in all of this. And obviously, Israel is rejecting that. So these are very, very complicated discussions.
All right, Sam, thank you very much for joining Manish and me this morning. That's Bloomberg's Sam Daher. This is Bloomberg.
tag on the product may read Made in the USA, but the sign on the CEO's door often says Made in India. Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware, and that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S., and it's a safe bet that some of them will eventually find their way to the C-suite.
DOJ or other authorities.
Could face bigger challenges. Britain's next.
Was going to keep reading World Cup. This is a 3
As the economic picture.
covering the intersections of Hollywood, Silicon Valley, and beyond.
.731 Lexington, it's our global headquarters. They said, hang up your boots in Dubai, you're done with the desert, come to America. I said, yeah, but there's a couple of things you need to know before you sign on for life in the USA. Come with me, I'll tell you. Okay, I can live with that. I've gone the full American now. I'm loving these bagels with the cream cheese. $3 to $4. Bottom line is, I have no problem with that. That's inflation. But this is the issue. They turn the screen around 18, 22, 25. Immediate tip me up. Buddy, that's the culture shock.
Manus, what a beautiful encapsulation of the past 3 months. That was literally like Seinfeld meets Annie Leibovitz. That was pure art. That was beautiful.
A big shout out to Sarah Masuli, who put that together, and the team. I mean, I suppose the red tape that comes at you when you come to live in a different country is immense. But of course, the shocking fact of the day is about bagels, isn't it, Danny? What's the fact of the day? We found a new fact of the day.
Yeah, this comes from our producer, Ann Torres, that if you live in New York and you get your bagel cut, you're going to get an 8% tax. Manus, you're not going to have any money left for my Christmas present by living there. I'm telling you, you're out of luck.
No, but you know what? By the time you get here, at the end of January, would you have promised me faithfully? And I will hold you to that.
I'll be there with you.
Peak rent for me, I paid the max. You get a deal.
I think you need to pay for my bagels when I get there, Manus. I'm going to put it in my contract with Bloomberg. Bagels will be funded by Manus Cranny.
Let's suppose you're on a plane and somebody realizes who you are. They say, I have $100,000. I don't know what to do with it. Where should I invest it? Where should they put their money?
So today, it's a easier decision than it was maybe 2 years ago because Treasury bills are 5%. So I would say, regardless of how much risk you want to take, you have to put a portion there. Then you would have to ask, really, an individual is the same, I think, as any institution. What is your time frame? Do you need to get access to this $100,000 in the next few weeks, the next few months, the next few years, not until you retire? And that will determine your investment decision.
So what do you think is the most common mistake investors make when they have 100,000, $1 million, or whatever they might have? What is the most common mistake you have observed that investors make?
I would say hubris and thinking you know more than you do, because every decision that you make has many, many layers. So as you're creating a portfolio, look at the risk as well, not just excited about the return.
And what's the best investment advice anybody's ever given to you?
Continue to learn about innovation in whatever you do, because that is where it's not exciting, that's where returns will go.
Slice through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal. Now, more to the point.
What is the lesson or the observation?
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back to Bloomberg Brief. I'm Manus Cranny in New York.
And I'm Danny Berger in London. Here's what you need to know. A dramatic reversal. Sam Altman will return as OpenAI CEO with an overhaul of the board also underway. NVIDIA fails to satisfy lofty expectations in the forecast generated by the AI boom, despite a growth surge. Plus, Israel and Hamas agreed a release of hostages and a pause in fighting, while Netanyahu stresses the agreement doesn't mean the war is over. The hype is all around AI, be it OpenAI, be it NVIDIA, but don't forget your friend, the lovely bond market. We did rally yesterday. We had those Fed minutes. Proceed carefully was the overriding narrative coming out of it. The front end leads things, but Bank of America and Citi, for their part, both note that the CTAs, the quants, they're doing a lot of short covering right now. Maybe that's what's fueling us, but we're taking a break this morning, up by a basis point. 4.88% is where we're on the front end of the curve. We're also looking at some selling in the gilt market ahead of the UK's autumn statement, the autumn budget. Chancellor of the Exchequer, Jeremy Hunt, is likely to unveil some tax cuts, but this isn't your 2022 market. We're perhaps less fearful of when we were when Kwasi Kwarteng unveiled tax cuts and rocked the gilt market. We're up by 2 basis points for your 10-year gilt yield. Meanwhile, Bitcoin, that dips down by 0.6%. We're going to talk about this later in the show, but Binance and CZ pleading guilty to charges from the authorities. But Manus, while I've talked about the cross asset, give the people what they want to see. They want to see NVIDIA.
They just want to see this glorious, glorious stock. I mean, it's bounced since we checked in on it. It was down 1% when we checked in just a short time ago at 5 a.m. You've got the stock down 0.6% at the moment, 496. We've just had a conversation with Itaú. They say buy any dip. They've got 625 on that. This stock is up 241% so far this year. This is the elixir of life. By the way, that bond market is no friend of mine. Technically, my pension fund has shifted more to bonds than to equities. That's what happens when you get a little bit older. S&P 500 just off a 3-month high. Are you exhausted? Are you proceeding carefully? What is your risk going into the end of the year? You are ever so slightly up by 4 pips at the moment on the S&P 500. Your risk is this, is that the rally that you've had is too much, over-exuberant and overdone, but not if you read Subramaniam's note over at Bank of America. It's one of those big, fat, bullish calls. 5,000 next year. U.S. exceptionalism, according to her, is alive and well in the stock market story, and you can expect a further 10% rally in that. NASDAQ, the Magnificent Seven, have delivered a furious rally, but the positioning by the hedge funds is perhaps the most concentrated in U.S. stocks that we've ever seen. And with that level of concentration risk, of course, potentially comes a dip. Stock 600 is up 0.3%. We've got a big note out from SocGen warning that growth is going to be less than impressive next year. Expected 10% drawdown in this market, Danny, next year. And when that slowdown comes, you can rely on your ever-present friend, not the bank, But the central bank, the ECB, rate cuts. There you go.
I thought you were going to say you could rely on the tech market. I mean, you look at NVIDIA falling,
not so
maybe
much
it's the
in the
greatest
European
opportunity
market.
of all time.
Yeah.
Yeah, okay, sure. So you have to rely on U.S. tech, I guess, in this case. I mean, as you say, if you listen to Tiao and Tiago Kapulski, now is a great time to be buying NVIDIA because he says buy every dip. There's a dip this morning.
Absolutely, and he says also as well with NVIDIA, it's not on some kind of cliff top. Yes, there are other people trying to come up with their own chip alternatives in that spectrum, but nobody has the intellectual capacity or the IP that NVIDIA has at the moment. Danny, let's shift a few gears. Let's pivot to credit, because here's what Man Group's Sriram Reddy says. We continue to be surprised by the resilience of the credit cycle, and by the US in particular, given the restrictive monetary policy and tightening credit conditions. Surprised? Sriram Reddy is with us now, Managing Director of Credit at Man GLG. Good to have you with us. So if you're surprised by the resilience thus far, be careful now with your next call, because it'll drive the rest of the conversation. What is 2024 for you? Is it a hard landing, which everybody's poo-pooing, or is it a soft landing? And does that resilience endure?
So we've definitely been surprised by the resilience, and if you look at it, particularly within the particular cyclicals versus non-cyclicals, historically you would expect cyclicals to dramatically underperform in this market environment. As we look forward, the conditions continue to be there, where tighter monetary policy, restrictive lending conditions will likely lead to slower growth. Not here to call hard or soft landing. Our view is that again, slower growth should mean wider credit spreads in the main for credit markets.
How wide, though? Because, again, it's been this amazing resilience. Does it blow out? Does it look like, for example, when we've seen in past recessions, or close to it, maybe if we don't get to recessionary levels?
So it's quite a unique environment, because we've just come from the COVID environment. So the proximity to the recent credit cycle changing is so close. And companies are coming into this upcoming recession with, I would say, a much better balance sheet. So I wouldn't say it's going to be very similar to, let's say, the global financial crisis. And if you look in the global high-yield bond market in particular, over 56% of this market is now double B. That compares to 37% back in 2007, 2008. So it's just, in general, a much higher quality market, which means that the spread widening could be less than we would have seen previously.
Well, that begs the question then, is there enough spread there to add? If you look at high yield spreads at the moment, because a lot of people have come in with Danny and I this recently, and they've said, look, these spreads are very well behaved. We're surprised about how well behaved they are. Perhaps there's no massive refinancing wall. Do you think that high yields offering a rich enough return to warrant picking up high yield at this juncture, or do you wait for that perhaps uneasiness to take hold in 2024 and for the spreads to pop?
So the interesting point is that spreads are telling us one thing, but yields are telling us another story. So spreads are definitely mid-cycle. You're looking at spreads at average levels. So, if I look at an index, that to me looks less attractive, but there is a significant amount of dispersion. So 60% of the market is trading in the first quartile, over 10% is trading in fourth quartile, and that fourth quartile level is where we think it looks much more attractive. And that's on the spread perspective. But on a yield perspective, yields are in a much more attractive threshold. So you can get yields of, close to double digits in the high yield bond market. So even as spreads widen, you do have quite a bit of cushion from just the carry of that asset class.
And rising yields comes into the issue, which I know you've talked about, the refinancing wall. But coming into view in 25 and 26, you say it presents more risks. But I can't help but wonder if this market is right and we're going to get, 100 basis points or more of cuts in 2024 alone, is the refinancing wall actually an issue for significantly lower in rates by 25 and 26?
So we saw it as a risk and an opportunity. There will definitely be some companies that were fashioned in a zero interest rate environment, and those companies may struggle to refinance. But in the main, in the large amount of issuers, we do think that they will be able to tap the market, and we do think that's an attractive opportunity. A number of these names are trading at significant discounts to par because the market expects that they won't be able to refinance. We also think that another lever that companies can pull looking forward is potentially convertible bonds. So they can issue in the convertible bond market and potentially lower their interest cost burden in the short term. And this is a market that is historically, back in the early 2000s, was the same size as the global high yield bond market. So we do expect more issuance there, more opportunities in the convertible bond market.
I did an equity roundup at the start of the show and talked about, the exceptionalism of the US in the equity market. Danny will take the other side of that stick, and she goes, no, man, it's at 7 stocks. I then ended with Europe, where SocGen are talking about a material slowdown. The equity market will draw down by 10%. Don't worry, central banks will come to the rescue again. I'm not so sure. But from a credit perspective, do you think that there will be a more turbulence and volatility in European credit relative to the US? Although you do say that there's complacency in the US, but how volatile will European credit be relative to US? Is that the differential I should look at?
Yeah, there's a couple of things I would say. First is that as a credit investor, I don't necessarily need earnings growth to have a successful investment. So I don't need the exceptional levels of growth that the U.S. has experienced. What I want is some sort of risk premium priced into the markets. And when I look at Europe, there's more both structural and cyclical opportunities in the European market. There are a number of known risks in the European market. The lack of energy independence, the proximity to the war in Ukraine. These are all risks that have been priced into portions of the credit market. And so for us, if you can really do your due diligence, there are some very good opportunities in the European market. For us, the U.S. just screams a little bit more expensive when we look at high yield, when we look at investment grade. It's just looking more expensive.
Sri, I'm afraid we're going to have to leave it there. Thank you so much for joining us this morning. That's Sri Ram Reddy of Man Group. All right, coming up, Binance pleads guilty. We're going to have why the crypto company is paying one of the largest corporate agreements in U.S. history next.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
Today's CFO has to be much more than a bookkeeper.
One of the most important things is looking around the corner.
We have to let go of the traditional legacy department store.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
You also have to be credible business leaders in order to really impact the business and steer the direction.
We are like biologists. We need to deeply understand the financial DNA of a company.
People just come with a playbook and say, okay, we're going to roll that. Don't do that. Think longer term.
It's an amazing time to be in this role. It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the chief future officers of some of the world's most influential companies. A new episode every month, only on Bloomberg.
Binance has agreed to plead guilty to willfully violating the Bank Secrecy Act, knowingly failing to register as a money transmitting business, and willfully violating the International Emergency Economic Powers Act.
We're here today to announce the Treasury Department's historic action,
the largest enforcement action in Treasury's history against Binance.
The Justice Department is requiring Binance to pay $4.3 billion in penalties and forfeitures. This is one of the largest penalties we have ever obtained from a corporate defendant in a criminal matter.
That was U.S. Attorney General Garland and Treasury Secretary Yellen speaking as Binance and CEO Xiaopeng Zhao have pled guilty to money laundering and U.S. sanctions violations. Now, the sweeping settlement with the U.S. authorities will allow Binance, the world's largest crypto exchange, to continue operating. Joining us now for more is Bloomberg senior crypto editor Ana Herrera. And Amanda and I were talking about this during the break. Is this cutting the arm off to save the body, or is this literally cutting the head off to save the body? I mean, what is Binance without CZ, and is it really Binance without CZ?
Yeah, we'll have to see. So they've now appointed a new CEO called Richard Tang, who was a former regulator, and that's a very different vibe and background from CZ, but also from like crypto sort of executives that we've been used to, right? So he has probably one of the toughest jobs in crypto now. He's taking over the biggest platform by volumes. It's a platform that still is dominant, but has been losing market share. So can he stymie those losses? And also, can he like make sure that people don't start withdrawing money from it, which is what happened with FTX?
Right.
And at the same time, can he like, you know, keep regulators happy, because they'll be like breathing down his neck, you know? It's not just the US, but it's elsewhere around the world. So how does he balance the need to keep Binance so that it still attracts crypto traders, but also so that it gets in line, which is clearly what everybody wants from in the US. I mean, the authorities, right?
So, Anna, I mean, you saw the Treasury there, Janet Yellen, and it was almost like a perp walk for them, wasn't it? The biggest fine ever. We've got teeth. We'll do the right thing. Do you think that this materially changes anything for the world of crypto?
I mean, it is the biggest platform, as I said. So if they do have to come in line, there's so many things which might have to change. They might be doing stricter KYC, stricter compliance. So like what kind of flows will continue to go through there? Who will decide to go somewhere else? You know, and also, you know, will it just lead to lower volumes and then just lower interest in crypto? It's hard to tell for now. You know, the price of Bitcoin, which is sort of a bellwether for everything else, hasn't really dropped much, which is what you would have suspected given the magnitude of what happened. But then again, we've seen FTX collapse, we've seen other big, you know, names go down, and the price has held steady. So maybe this just means that crypto becomes more mainstream and boring.
Well, I mean, to your point, there have been a lot of big names: Sam Bankman-Fried, Alex Mashinsky, Do Kwon. I mean, a lot of these big founder types who have come into trouble with regulators. Is this kind of the end for the big name legal battles, or do regulators have their sights on more?
I mean, we still have to see some of like the big names go through sort of the you know, the legal process, but I mean, there are very few crypto CEOs left that were there a few years ago. So, but you know, with crypto, you never know. It's interesting. People like a year ago, we were speaking to CZ live. I remember it was around Thanksgiving, and he was saying he had a $1 billion fund to save crypto, and now, you know, a year later,
he needs the saving.
Yeah, it's been very different. Yeah.
Yeah, a week in politics, a year in crypto. There's something in that, isn't there? Anna, thank you so much. With us on the crypto trail. Speaking of which, we caught up with the Coinbase CEO, Brian Armstrong, on the news. Let's take a listen.
Well, I think this is really a vindication of the long-term strategy that Coinbase has taken to build a trusted and regulated company. Going back to 2012, we really decided to do that and got the licenses and got the teams in place that were necessary to run that type of company. And then every few years, we did see a new company come on the scenes that didn't take that approach. Sometimes they would grow very quickly because they were able to offer products that we didn't think were legal. But inevitably, they do come crashing down. You know, regulators do eventually act, even if they don't act quickly, and that's what we saw here in this case today. So it's not only been, I think, an opportunity for Coinbase to step in, but it's also an opportunity for the industry, I think, to turn the page here and say that, yeah, some of the rules are clear around AML, KYC, OFAC, that the issues that Binance really had, you know, stepped over the line on. But some of the areas of the law are not yet clear. We need to go get that regulatory clarity to make sure that the future of this industry is built here in America, not on offshore unregulated exchanges. And so that's what we need to go do next. And I think it'll prevent this kind of activity in the future.
But listen, even with this crackdown that you're seeing, there were some really scathing allegations in the DOJ's crackdown, sanctions violations, illegal trafficking of drugs. You know, how do you know that this is it? How do you know that there are not more bad actors out there that would continue to stain crypto?
Well, I can tell you the companies that I really engage with, at least especially the ones here built in the United States, they don't get the big headlines because it's not salacious. They haven't, rocketed up because, they're not following the rules. But there are dozens of really well-intentioned and well-funded and compliant U.S.-based crypto companies that are building this industry. I mean, you have to remember that 52 million Americans have used crypto now, about 400 million people globally. And so while there are bad actors who try to use crypto, the best data we have is that that's less than 1% of the activity is for illicit purposes. By the way, the US dollar cash is about 4% illicit activity. So crypto is really not uniquely crime-ridden, and the centralized actors in crypto, they need to follow these rules around transaction monitoring, KYC, AML, just that like Coinbase has been doing for over a decade now to make sure bad actors don't take advantage of these systems.
Coinbase CEO Brian Armstrong speaking with Bloomberg's Sonali Basak. Manus, can we talk about the home of crypto in a different light? Miami, Ken Griffin, we know, has moved there, and he's trying to buy more Miami staples. Ooh, yeah, okay, Will Smith. Ken Griffin reportedly is in talks to buy a minority stake in the Miami Dolphins, the Hard Rock Stadium, which is where the Dolphins play, and the F1 Miami Grand Prix. This would be a massive deal, maybe one of the biggest deals in NFL history.
Well, let's be honest now, he's got a few dollars going spare, hasn't he? He moved himself and the family, and we've heard from him recently, he's talking about Miami being potentially the challenger to New York. We've heard that theory from a number of different people. He's worth $36 billion on the billionaire index, the Bloomberg Billionaire Index. And if you go back in terms of what was paid in 2009 for that stake by Stephen Ross, it was $1 billion for 95% of the franchise in 2009. That's in the Miami Dolphins.
Let me tell you, if he does buy the F1 in Miami, I hope he makes this thing look better. I think we might have some pictures of it. I don't know if you can see.
Have you been to the Miami
of it.
Have you been to the Miami F1? Because you don't like Las Vegas.
So I
we got that
haven't.
at the start of the week.
Okay, I haven't been to either. I kind of can't afford tickets, but that's besides the point. I've watched it on TV. This F1 in Miami, Manus, has a fake marina. It literally has fake water around the Hard Rock parking lot where they just kind of park boats on, but it's not actually water. It's a blue ground. You want that, Manus? If I'm going to be on a yacht, I'm going to be in real water. I'm not going to be on fake
if you're
water.
going to be on a yacht, you're going to be the Abu Dhabi Grand Prix. I've got it now. Where's my tickets? Hold on, let me just see.
Yeah, I was going to say, do you have tickets for me?
Okay, yeah. Oh, look, I've got two tickets for the Abu Dhabi Grand Prix. I wonder who they came from. Let's call compliance. We don't have any tickets for any Grand Prix. Let's just put it out there.
No.
It's too expensive a ticket.
No, we don't.
We're $50 max on incentives here. We'll take it. We'll set up the agenda for the rest of the day. I'm getting ready to fly to London. I'll be with you on Friday. I know that you're excited about Thanksgiving, so we'll talk about that in a moment. But there are other things that can move markets on the eve of Thanksgiving.
Yeah, there certainly are. We're going to have that look for you coming up. We're going to cover some of the market-moving events for you to watch throughout the next 24 hours here on Bloomberg.
What do you worry most about your economy and
Greece. And when you look at tourism, it's booming, but it also means some of the islands are overcrowded.
Exactly.
Is there something that you can do about that?
Thank you for asking this question, because I want to make sure that, in 5 years from now, we will not have sacrificed, the beauty of our sort of natural environment at the interest of a very rapid growth. So that's why I'm really focusing on sustainable growth. That's why I will always push for quality over quantity. Very strict in terms of standards. We are actually looking at our local and regional sort of planning legislation across the country to make sure that we know exactly what we can build and where we can build it. There are parts of Greece which have reached saturation point, and if we have to place restrictions, we will, in order to protect, especially islands, which are more sensitive.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
You're watching Bloomberg Brief with Danny Berger in London, Manus Cranny in New York. Let's get you set up for your trading day. Here's a look at what's ahead. We're going to get U.S. jobless claims and durable goods at 8:30 a.m. Eastern. Eurozone consumer confidence also at 10 a.m. Eastern. Then German Chancellor Olaf Scholz will be holding a press conference with Italian Prime Minister Giorgia Meloni. That will happen in Berlin at 11:50 a.m. Eastern. But ahead of all of that, UK Chancellor Jeremy Hunt delivers his autumn statement at 7:30 a.m. Eastern. It was the thing that rocked the bond market last week, but gilt's a little bit more calm ahead of that, Manus. The thing that's going to rock the market, though, it's these tech earnings.
Look, absolutely. NVIDIA, a lot of volatility. Some people are saying it's priced to perfection. Well, not if you go by the analyst that we just had on 50 minutes ago from Itaú saying 625, buyer of the dip. Nobody can snap at the heels of NVIDIA. We dropped 6%. We closed down 1%. We're actually back in the green this morning in the space of 54 minutes, 21 seconds. We've turned it around. We moved the market.
Yeah, well, that's pretty good.
There you go.
There you go. Is that us? No.
No.
I don't claim to believe that. HP, though, Manus, this is one that has not managed to turn around. It's missed some of its earnings, down 2.3%.
Yes, revenue fell 6.5% on Hewlett-Packard as well, so one for that. Now, I'm on my way to you, which technically means I'm missing my first Thanksgiving in the United States of America. Yeah, but there is a beautiful Christmas tree as you come in through the door here at 731 Lexington. So, are you hosting? Are you hosting Thanksgiving? Are you actually going to cook anything?
Well, Manus, I mean, I would fully cook you a turkey meal, but you're stopping in London for, 24 hours, then you're off to OPEC in Vienna? I mean, give a girl some time to cook. I can't pull something together that quick.
There's always takeout. Listen, do you know what caught our eye? This is the cost. The costs actually slip never mind the turkey, it's the cost of the sides. They're the actual killers. Mashed potatoes, stuffing and dressing, cranberry sauce. So these are all the things where you're going to see a little bit more of a spike on the upside, aren't you?
Well, I mean, look, fresh cranberries down 18.3% this year. Maybe you just have a Thanksgiving of only cranberry sauce. It's just pure cranberry sauce. That's how you're gonna save your budget. But man, this is the sad thing. Pumpkin mix, that's more expensive. Pumpkin pie is the best thing about Thanksgiving by far. It is absolutely the best thing.
I gotta say, I've seen a few pumpkin pies, but I sort of slid past them. That data came from the American, by the way, came from the American Institute. Let's just scroll that back so I can attribute there we go. It came from the Bureau of Federation. It's 38th annual survey. So I'm on a plane. Let's hope it doesn't snow at JFK, myself and the journey. I'll see you in 24 hours. Danny.
Yep. Safe travels. I hope they don't serve you any dry turkey. That's it for Bloomberg Brief. Surveillance, they're getting ready. Up ahead.
The shape of the On athletic shoe is unique. It can't be mistaken for any other brand. The structure of On's C-suite is just as distinctive, starting at the top with a pair of CEOs.
What we realized very early on is if you're adding different capabilities to each other and you do that as equals, then this leads to better outcomes.
Mark Maurer joined On as Chief Operating Officer in March 2013. Martin Hoffmann arrived as CFO that July. In 2021, they jointly assumed the CEO role.
We are a brand that needs to be excellent in designing product, in innovating product, but also in shipping millions of parcels from A to B in the most efficient way. So we need to have very different mindsets and very diverse people. Mark has different strengths, I have different strengths, and if you take us together, you just get more.
Companies with co-CEOs are rare, but On's configuration is even more unusual. Martin Hoffmann also holds the CFO position. He says his two jobs complement each other.
I actually feel the CFO makes you a better CEO, and the CEO makes you a better CFO. Understanding what you build as a CEO helps you to understand your numbers, and understanding the numbers helps you what are the right things to build.
Good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to the Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg. Top experts. Great questions.
You know, we think that eventually these interest rate hikes are going to have to bite more.
I don't expect the Fed to cut rates until the second half of next year.
Maybe the Fed is done. The notion of higher for longer, I think, is somewhat being lost on investors.
The economy moved slowly and inflation has come down. Personally, the Fed had very little to do with it.
There's also a chance that inflation, doesn't fall back to 1.5, that it gets stuck at 2.5 or 3.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Your equity market positive again on the S&P, up by 0.2%. This slide from Julian Emanuel of Evercore, who absolutely nailed it on NVIDIA. TK, great isn't always good enough.
Yeah, great isn't good enough, and Citigroup came out with a very terse thing. They said we maintain a buy, but it's a range-bound buy, which you rarely see. And what it is, I guess, enthusiasm over the plan forward, worries about China. We all know this after 4 p.m. Yesterday. The world stopped at 4:20. You believe it? Yesterday was like worse than Apple.
Just going over the numbers.
It's like NVIDIA.
This is like the darling of the stock market rally this year.
The darling is a perfect way to put it. But the answer is some of these people are saying it works, maintain buy, but how richer can rich get?
Let's get to some Southside research from Evercore. Just another run-of-the-mill blowout quarter for NVIDIA. Bloomberg Intelligence. Lisa, I think this is just amazing to see. NVIDIA's third straight double-digit percentage beat of sales consensus this year. Bramo and a raise.
Okay, so this is exactly what I was looking at, the actual numbers, that revenue in the current period will be about $20 billion. The expectation ostensibly was $17.9 billion. Some people had expected as much as $21 billion. This was punished on Wall Street in the immediate aftermath. But this came even with the declines they saw in China, which means that there is enough demand to suck up what would have been purchased by China, and raises these long-term questions about just the ability to produce enough chips. So at a certain point, this is really bullish. But if we just priced it all in?
At the very least, Tom, can we call this a validation of the rally so far year to date?
I like what Dan Ives said, and then he went to the derivatives. He said, okay, NVIDIA is the focal point, but there's the first derivative, the second derivative, the third derivative of this AI stuff, which frankly I don't understand. Mandeep starts talking and my eyes glaze over, my ears too. And the answer is there's a fallout here that redounds on Microsoft, a bit in the news, but 20 other companies as well.
Can tech journalists go to sleep now? I think they probably can.
Yeah, I think
the OpenAI saga coming to a close, and we're kind of back to where we started, Bramo, but with a different board. Sam Altman returning to OpenAI.
Although with that much closer of a relationship with Microsoft, I think that's really the takeaway. Not only was Microsoft a 49% stakeholder in the company to begin with, but now they're the ones saying, okay, yeah, the joke's over. You can't do this again where you don't tell us and you just kick the CEO out and then there's no rationale. So yeah, things are going to change.
Things are going to change. We're going to punish you so much. Yeah. Larry Summers is coming on the board.
Is it like Liz Truss? Is it like Liz Truss, where Altman gets a Microsoft pension because he was there so long?
I've got no idea, TK. Isn't this just kind of like an interim board? Lisa, isn't this about a board putting together some kind of better governance structure and then we'll appoint new directors?
Larry Summers already has 7 other board chips, so I imagine that he has a lot on his hands. But I'm looking right now at, what we're looking at in terms of bringing adults into the room, trying to create the right structure. And maybe this is just a placeholder. I'm really not an expert on exactly what they're doing because, honestly, I haven't really gotten any clarity on what transpires.
Wall Street Week this Friday, Lawrence Summers and Sam Altman will be with David Weston. I'm making that up, folks. But the answer is Larry Summers brings a lot of academic firepower with his presidency at Harvard. He's not just another economist putting out a shingle.
The end of the soap opera. I think we all hope. Let's get to some real news. Yeah. This one right here. We talked about it yesterday. Hamas agreeing to free 50 hostages from Gaza in return for a 4-day ceasefire with Israel. And Lisa, the release of 150 Palestinian prisoners. And it could be the first phase of maybe a few phases of seeing the same kind of thing.
So now the question really goes to, A, does it happen, which everyone is hoping that it does, to try to prevent some of the carnage that we have seen and bring hostages home. And the second thing is, where does that leave the conflict, right? It's not over. So is this the beginning of some kind of resolution? I think it's interesting that markets have not responded either to this news or to the war as it's grounded on. And that, to me, is interesting because is this not anymore a market-moving event?
To your point, the war continues. Prime Minister Benjamin Netanyahu has been very clear about that, and the objective, the sole objective, is still the same, to wipe out Hamas. So you've got a 4-day ceasefire, but ultimately, Bramo, we're going back to the same issues.
And this is from the Telegraph, John, on Netanyahu, quote, "We are at war and the war will continue until all our goals are achieved." That's from the Prime Minister of Israel.
More on that story a little bit later. Let's turn to the price action. The scores look like this on the S&P 500 this morning. We're positive by 0.1%. Yields aren't up. They're a little bit lower. We're down a basis point, Lisa. 437.89. It's a break of 440 in the last 24 hours.
And things have been relatively stable. So yes, we're grinding lower, but it's a grind. It's not a whipsaw, which maybe gives people a little bit more confidence. 8:30 a.m. to me is the big news of the day. U.S. initial jobless claims. We also get some durable sales as well. We just taking a look at the unemployment rate creeping higher. And it's been a steady creep higher throughout the year, increasing about a 0.5 percentage point over the past 6 to 8 months. Do we end up seeing initial jobless claims confirm that type of trend? And then is the market reaction significant? 10 a.m. we get the final read of the Michigan Sentiment Survey. Might be interesting to you since you care a lot about it. I'm particularly interested in the expectation for the next 5 to 10 years. It's 10 a.m. How long gone can it possibly be?
Can you
just come off TV?
9:56:30.
Then you're out the door by 9:57.
I'll be picking up pies and I'll be long gone. You, Mitch, sent.
I walked by her desk today. She's got Martha Stewart up, the perfect.
Oh, right. And how do I destroy it? But honestly, I'm looking at just, the 5 to 10 inflation expectations that John will not be looking at. And then also just following on the story about the potential for hostages to be released. We are looking for that to happen starting as soon as early Thursday in the morning. And I mean, to me, I just really want to see how this happens and then what comes next, as we were talking about.
What comes next is continued war, and it will be a ballet of hostages as they slowly come out. I believe Aaron David Miller is scheduled to be with us today, which is wonderful.
That'll be cool.
Some serious expertise.
A little bit later, we need to talk about some of these market calls as well, Tom.
Yes.
5,000 seems to be the popular number right now. Yesterday, Bank of America, Savita Subramanian.
I agree.
RBC's Lori Calvasina, 5,000 year-end next year.
I read every word of it, and it's really important here with Calvasina. She's saying, look, this is the post-COVID market, and it's just starting. I think that the SPX, we were sort of benumbed by it. On radio right now, a great chart showing the divide, John, from 4,400 up to 5,000. Ed Calvasina there at 5,000. Throyd Yardeni up on top, his own research shop, 5,400. To put this in scale, 5,400 is a Yardeni 41,700 on the Dow. John, I've never framed that, which means I've never framed SPX 5,400.
We are thankful on this Thanksgiving Eve that you framed it for us.
That's good. The pilgrims looked at the Dow.
It's going to be all show.
Makes a difference.
It's going to be all show.
Oh, you should have seen.
They
didn't have a Bloomberg on the Mayflower. They did not have a Bloomberg on the Mayflower.
I was in bed last night. They started on speakerphone over the phone last night.
We thank
Give it
you.
up. Give it up.
Yes.
Jonathan Stubbs joins us now. We're thankful. The equity strategist at Berenberg. Jonathan, thank you for joining us, sir. Let's just start with this tech dominance. NVIDIA out with some stellar numbers. Not getting much love in the pre-market this morning, but getting a ton of love year to date. The winners of 2024. Do you expect they'll be the winners of 2023?
I think investors are in a bit of a sort of hard place here, because you follow momentum and you're still sort of running some, and some's the key word, some of these sort of mega sort of tech winners, clear sort of momentum winners in the market right now. And as you say, they've been incredible performers year to date. But you go back to sort of signals from sort of valuation, and the broader US tech sector is trading back to an 80% PE premium against global equities, which is the TMT peak. So you're getting valuation signals, which some are going to be very happy to ignore, which are telling you to do one thing, momentum signals telling you to do the other thing. It also overshadows what's happened in broader tech this year, and one of the worst performing indices around the world on a median basis has been the Nasdaq Composite Index. Obviously, that's the 4,000 stock index, and that's because half of the companies in there, 2,000 companies, entered this year as loss makers. And if you're losing money into a sort of sharply higher interest rate environment, it's a tough gig. So tech is being it's very much a two-speed street right now. The very big ones have been stunning performers, and into next year, investors have got a big call to make. At the very least, they have to hedge exposure to sort of AI and tech into next year.
Jonathan, it's percolating right now, this idea of fundamentals, looking at CFA type, ratios and accounting statements, and technical analysis. I love the acuity of your note that you should put more weight on technical analysis. Discuss that. How do you actually affect putting more weight on technicals?
Yeah, I mean, most of the market is fundamentally driven increasingly over 20, 30 years. Obviously, investment horizons have got sort of shorter and shorter term, but also over the last 2 or 3 years, one of the biggest bull markets has been in uncertainty. And when I go around all parts of the world right now, it's that lack of conviction into next year, which is the dominant focus for most investors. So a backdrop of uncertainty, which is political, geopolitical, policy, macro, etc., really sort of, I think, shines a much brighter light on technicals, because technicals are a very pure way of reflecting investor crowding in markets at key times. So we look at sort of a range of technical indicators, but the core ones like RSIs, like breadth, investor sentiment, these are consistently and have consistently given pretty good signals for investors to sort of turn up or turn down exposure to equities over the last 2 to 3 years. And we keep using them. And if you're using them today, obviously, we've gone from one end of the RSI range oversold to now we're very close to sort of overbought. So again, it's another signal where if we're being true to those signals, we're probably not sort of chasing this incredible rally we've seen over the last 3 to 4 weeks.
Do bonds matter for equity valuations from here?
Yeah, I mean, hugely. I mean, clearly, the rally we've seen in equities, in the last 3 to 4 weeks, which, in small mid-cap land has given all of the returns that small mid-caps will deliver this year. In global equities, the rally we've seen has given more than 50% of the year-to-date return. So it's been a spectacular sort of very short rally. And it's happened, as 10-year treasuries have backed off sort of 5 handle back to sort of 4.5 as the markets gotten into a more comfortable place on inflation and rate expectations. So bond yields matter hugely, and also the sort of duration impact is very important. The higher for longer sort of narrative is still very much in play. We are in a sort of a more normal interest rate environment, and that suggests hurdle rates are higher, its funding costs are higher, challenges different business models. So bond yields matter hugely in this market. They're also a competitor for capital. So if I've got $1 to put into the market today, I can get 6% on investment grade in the US. I can get sort of 9% on high yield. I can go to the 2-year and get 4 or 5%. That's a genuine competitor to equities as we go forward. So that also changes the capital allocation mix for investors.
Jonathan, it's great to get your perspective. Thanks for the insight. Jonathan Stubbs there of Berenberg. I think we've got to frame this. How long does it take to write one of these outlooks, Tom? Starts about a month ago? Maybe a little bit longer? Let's spend a bit of time doing this stuff.
But they're thinking about it from July 4th.
Of course. So let's frame that out. let's say you get to November, you've really nailed down your thoughts, your feelings about 2024, and then all of a sudden, in a single month, the S&P 500 is up another 8%, the NASDAQ is up another 10%. The TK, these are big moves already this month, and still from here, we're looking for a double-digit return in 2024. Can you imagine if this was published in early November?
Well, yes, it would have been very different than
How
now.
controversial
like
it would have been.
Yes, 45,000 is the new 4,700. You have to remember that all of the strategists, the good people that we have on here, we mentioned Lori Calvasina earlier, they have to report to revenue producers. And the revenue producers have to go out and speak to the troops, institutional and retail. And in real time, it's happening, and I can't emphasize this enough, it's happening. Getting from Monday to Friday right now is tough.
And the most important question to ask is, how do you feel? At least that seems to be what we're hearing.
Feel?
I feel really good. I feel like I'm in the holiday spirit. It seems like everyone else is too. Look, Lori Calvasina, the reason why I said that is because you mentioned Lori Calvasina.
Sure.
And she said, we've been telling investors that we believe the weekly AAII Investor Sentiment Survey has been the best star in the sky to navigate the U.S. equity market in 2023. Basically, what we just heard there from Jonathan Stubbs. How do you feel?
Help me
feel
over
good.
here.
We do too.
Is Lisa doing stuffing in the 9 a.m. hour? The perfect stuffing in the 9 a.m. hour.
I'm just saying that these would have been called for something like 20% upside at the end of October. Yeah. It's a big turnaround in the last month or so.
In December's happy month.
You
2
feel good?
p.m. I don't. It doesn't matter what I think.
From New York City this morning.
Window dressing.
Good morning.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg. Context changes everything.
If you're a betting person, you don't believe, despite the fact that this is welcome news and we're very, very happy if we can get any of these hostages back to their families, no one should really believe that this is the beginning of the end of the war. We're not close to that right now.
That was Ian Bremmer, the president and founder of Eurasia Group, speaking on Balance of Power yesterday evening ahead of this morning's announcement that Israel and Hamas agreed to a temporary ceasefire and the release of some hostages. That's the latest out of the Middle East from New York City this morning, the latest in this market. Equity futures pulling back just a touch on the S&P 500, now positive by 0.16%. In the equity market, we pulled back yesterday. Nvidia a little bit lower. Bramo, even with some fantastic numbers, just kind of the story of the last year, I guess, validating massive returns, but not good enough.
How high is the shadow bar, right? I mean, you wonder how much of the gains of the year have gotten baked into to similarly catastrophically amazing types of returns going forward. Is it sustainable? And that's really the question that we have to ask for all the moonshots we've seen in big tech.
We've seen some moonshots, but far more importantly are the non-moonshots, where they're lifting up and things that were modeled out to go up 8% are going up 12%. Things that were modeled to go out a lofty 15% are going up 21%. To me, that's much more interesting than, the given story stock moonshot, because, John bought NVIDIA and I didn't.
To be fair, though, this is more than just a story, right? These are real numbers. We're talking about 3x revenue year over year.
Yeah.
It's kind of phenomenal to see.
And I looked at the breakdown, and this is not the gaming area. This is the AI, the Sam Altman area. And somebody said yesterday, different nations are literally buying block purchases of NVIDIA products because there's nothing else out there.
That someone was Bramo.
Hey.
That was Lisa.
I can't,
that was
the
Lisa.
brain fails. I mean, I'm looking at flight delays at LaGuardia. Leave me alone.
Flight delays at LaGuardia?
Yeah, at Newark, it's a
40%
40% delay right now.
It's already?
Newark,
Is that because it rained this morning?
Yeah, it rained this morning.
Okay.
Yeah.
That'll change things, Tom.
Yeah, well, Middletown, the Gulf Stream is not delayed, but you get wet getting on the plane.
You getting on a plane today?
Yeah, we're going.
Where are you going?
South, the sun.
Brooklyn.
Oh. South Brooklyn.
My father used to literally say, "We're going south, Pittsburgh." Lily would do that.
Are you tortured by that, Tom?
Tortured. It was a deprived childhood. Joining us right now, and this is a serious conversation with his expertise, his experience in service for the United States. He's a former senior U.S. intelligence official, and of course at the Center for Strategic and International Studies. Norman Rule has been very good to us in briefing on this terrible war in the Eastern Mediterranean. Norman Rule, just simply, what is the level of intelligence that we have on Gaza? How blind are the Israelis as they work north to south in Gaza?
Good morning. Israel, although it was surprised by the October 7th attack, has traditionally had exceptional intelligence on this area. And I think we need to keep in mind that it has captured hundreds of prisoners. It has used tactical SIGINT. It has used drones to acquire a vast amount of intelligence. And this hostage exchange will provide about 4 days for them to ingest what must be a massive amount of information, from prisoner interrogations to laptops, to shape future attacks in 4 or 5 days.
Ian Bremmer told Bloomberg here in the last 12 hours that this war is not over. On a percentage basis, how much of this war is over?
Well, that's difficult to say, because the war itself being over would require the eradication of Hamas as a threat to Israel, and that requires the eradication of Hamas's senior-most leadership and the destruction of their weapons caches. Now, Israel has destroyed about 400 tunnels. It is taken out several dozen Palestinian commanders from the Palestinian Islamic Jihad and Hamas, but they have a ways to go. This operation right now requires that they remove more civilians who are under significant threat, and then they've got to move south to Khan Yunis, which will probably begin in about 4 or 5 days. So this war has weeks, if not months, to go forward.
Is this war winnable, Norman? Are any of these goals achievable at a time where they're fighting, a certain degree of hatred and ideology that has grown up out of circumstances that hate is going to be continued?
There is no question that Israel can eradicate most of Hamas's and Palestinian Islamic Jihad's senior-most leadership and their weapons capability and many of their tunnels. But as you correctly stated, that there is going to be a foundation of indoctrination and hate that really must be addressed. And that is going to be the job of the day after the two-state solution. It's going to be difficult. And the most challenging aspect of the day after is not going to be identifying the leaders on the diplomatic table, but who provides basic security and Palestinian society to prevent new militants from emerging with a Hamas 2.0 or an ISIS 2.0 in the ruins of Gaza.
Arab nations have come out and said that they don't want to be the ones that are the peacekeepers. They don't want to send troops into Gaza. Israel has talked about it and then pulled back after people said, no, you are not occupying Gaza. Once again, who could possibly take on this role, and who could possibly lead a nation that has to, or a territory that needs to really be rebuilt in a massive way?
This is a hugely important and yet unaddressed questions. My contacts within the region and within Washington say that there really is not yet a plan. One could imagine a situation where a UN mandate, perhaps put forward by the Emiratis, who have the Arab seat on the UN Security Council, could create some sort of international force that would be augmented or supported behind the scenes by Western actors. But we're a long way from getting there. And until we're able to do the nuts and bolts of putting Gaza's basic security infrastructure together, we're not going to be able to achieve the peace that everybody wants.
Norman, our framework of your world and your service to the nation is what we see out of Hollywood. And I mean this seriously now. You know, we go to the movies and there's, you know, 40, 50, $60 million productions of intelligence under risk, intelligence in danger and all that. What's the level of danger right now to intelligence gathering? Is it just sending drones out, or is there some real risk here to Americans as we gather intelligence in this war?
The most significant risk is going to be for Israeli operatives in Gaza, who perhaps might be meeting human sources, but are acquiring prisoners from which they can produce the intelligence. Where are the tunnels? Who's in the tunnels? Where do you store weapons? What's the command and control structure? How do you communicate with your leadership? All of these questions are being put forward, and this is being acquired in a battle environment. So you not only have the traditional threat of working against a terrorist organization, but bullets are flying.
Norman, always learn something listening to you. Thank you, sir. Norman Rule of CSIS. I think we can all agree a positive development here, Tom. 4-day ceasefire, release of hostages, perhaps able to be in a position to do this again sometime soon. But to Norman's point, to Ian Bremmer's point, this is not the end of this conflict.
And to get the methodology down to do it again, there has to be a first time. And so if you have a second time coming up here after further conflict and war, maybe it'll be easier the next time.
There's also a question of, is peace achievable? What does a two-state solution look like? Do people want a two-state solution? Who are the leaders going to be of both nations? Because there's a lot of internecine conflict in both Israel and Israeli politics, as well as in Gaza, with respect to the leadership there.
Mr. Rule took it more granular in forgetting about the diplomacy of 2 states, 3 states, 5 states. It's about who's going to run Gaza afterwards, who's going to provide most basic security, let alone the massive rebuild of Gaza, if that's assumed.
Politico's line this morning, Tom, a brief triumph for diplomacy.
Yeah.
The president has really lent into this as well, and he's in a very delicate position in this White House with regards to supporting Israel's efforts to destroy Hamas, given the recent pollings, TK, we've seen over the last week or so.
Yeah, the polling is tangible, and I'm sorry, I go back to, you know, election 101, which is foreign policy in October doesn't matter. You get out of Labor Day, you go to October, John, first Tuesday in November, nobody's talking about Israel, they're talking about emotional stuff, including the culture wars in America. That'll be an overlay on top of it.
In about 2 hours' time, we'll be talking about the economy. Jobless claims just around the corner. Neil Shearing of Capital Economics is going to join us. I think this is kind of the data point of the week so far. Fed minutes, total snooze. Guess what? They're going to proceed carefully. I saw some great takes on that yesterday. As opposed to what? Proceeding recklessly.
We're going to proceed recklessly.
What does that even mean, Bramo? Proceed carefully.
It means they're saying nothing, which is exactly what we expected. And basically the market's like, okay, great. That's what you got for us.
They're going to proceed carefully, TK.
I got 16,000 on NASDAQ 100. Everybody's making it up as they go. That's all there is to it.
No Fed speak for a whole week, and we are thankful.
I didn't read the minutes. I'm proceeding carefully. The delays at Newark.
For that?
John.
No, it gives you something to talk about.
The delays at Newark aren't as bad as they were 20 minutes ago.
Keep us updated, Tom. This is important.
Yeah. Middletown to Gulfstream's ready to go.
think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had